Yourself a Democrat, Republican, Independent, or something else. The road to 2020 is on TuneIn.
What a night!
And a complete earthquake. This was
Follow every step of the Democratic primaries while hearing the latest headlines from the White House with live 24-hour news from CNN, MSNBC, Fox News Talk, and more.
We're closing in on the first results in the battle for the White House.
Experience the election through the sources you trust with the nonstop news channels on TuneIn.
It's Liz Hernandez with your TuneIn Music News Update. Ed Sheeran tells Entertainment Weekly magazine that a rapper convinced him that he didn't need a band. Ed says, "There's a rapper in England called Registry 2, and I remember when I was considering getting a band. He was like, when I do shows, all people want to do is come and sing your song back to you. They just want to scream it at you and have a good time. So my way of entertaining is making sure that everyone is involved at all times and sing and dance and have fun." To hear more music from Ed Sheeran, search today's hits on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
You're watching CNBC Squawk on the Street, live from the financial capital of the world. The opening bell is coming up in just under 3 minutes on a very busy Thursday. We've covered some of the retail news. GM, we're going to talk to Mary Barra in a few moments. Interesting reports last night, Jim, out of Slack, among others. We heard from Stuart Butterfield earlier this morning on Squawk.
Yeah, it's funny. Slack was initially down 10%. And people were saying, you know what, it's just still one more of these companies that had too much revenue growth and not enough earnings growth, whatever. It turned around. And maybe that's a signal that this incredible slide in a lot of the software as a service cloud stocks, which has just been humongous, could be trying to find a bottom. Workday being an example of the worst, as people just felt that Aneel Bushy was a little muted. So I don't know. I mean, this is one that is a shocker to me that it started to come back. Stuart's really good.
Yeah, but there is this concern that Microsoft eventually is going to eat them up. Not, so to speak, buy them, just eat up their business with its competing product that over time will overtake them.
A lot of people keep thinking that Microsoft is going to shut down the cybersecurity industry by coming up with something better, and they haven't yet. But I agree with you.
Yeah,
the superior product may not win.
They do have a product out
superior product may not win now. And this is also, by the way, it's a little like Dropbox. People, if Satya wants to own certain areas, the profit margins go out. Slack is a great product, but you're right. That is the big Achilles heel.
Big question, I guess.
Very big.
But he was addressing it this morning on Squawk.
We're going to benefit from Stifel upping Alphabet to $15.25. They were at $13.25. And then Citi kind of throwing in a bit of a towel on Apple, going to $300.
Yeah, how do you like that? I mean, this is one of those things where I read it and I say, don't trade it, own it. Well, he tried to trade it. Too cute. By the way, HSBC comes out with the anti-Facebook piece, and we didn't get to talk, obviously, Speaker Pelosi really starting to talk about the idea of regulating Facebook. And this is that whole Sacha Baron Cohen, that's an ATL speech.
Facebook, it's all platforms.
All platforms. It's just, right, Alphabet too. I can't.
It's a 1996 law.
Well, it's
back to 1996, the beginning of the internet as we know it.
Right. Now, you know, it is literally the great, it's a great margin enhancer if you can run anything. Because your client's the reader or your client is the advertiser.
Let's get We'll get the opening bell here at the big board and get the S&P 500 at the CNBC Real-Time Exchange. At the NYC, it is the Marine Toys for Tots celebrating its 72nd anniversary. At the NASDAQ, the Blue Shirt Group, a tech-focused IPO advisory and investor relations firm. Now, there's Viacom, CBS, Bob Bakish, Stephen Colbert, Trevor Noah, and John Krasinski, I believe.
There's Sherry Redstone.
How about profits? Are profits ring?
Say again?
See profits there?
There are profits.
6 times earnings?
It is trading at a very low multiple.
Lowest multiple in the S&P?
Yes, it is amongst the lowest multiples. It is cheap, many people would say, but there are continued concerns, as you well know. Today is the first day the stock will trade VIAC and VIACA. VIAC is the one with 560 million or so shares out. There's continued concerns, of course, about their ability to, well, John Malone talking with me, a week ago, about sports rights, how dependent they are on them in the NFL. In a world where everybody has a direct-to-consumer platform, they are kind of take a more hybrid approach, right?
Hybrid, correct.
A lot of content for other platforms and to support their own. Do they have enough international reach, enough scale?
I don't know. My Chapel Trust owns it because it is the cheapest stock, and that's pretty much why. And then I just felt you got to own the cheapest.
We know what's happened to the stock since they announced the deal. These synergies that were announced were not what many investors had anticipated in terms of the number. Then you had cash flow projections when we saw the proxy that were below sort of what people had anticipated, at least in terms of when they were going back and forth.
They were a little defensive.
But to your point, it's
inexpensive,
very cheap,
and they were not happy with John Malone's view that they're not good in international.
No, they were not. They were not.
I believe that the combination is going to have a lot of synergies, but I understand that it is in the content business where they have football content. And everyone is so afraid that Alphabet's going to wake up and say, you know what, we're going to be in football business. They come back and say, the NFL loves the quality of our production.
They do. And Fox will tell you the same thing. Because let's not forget, Fox is also this small company.
I know.
21 billion. Fox has got a 21 billion market cap, right? It's sports and Fox News and Fox Business. And there as well, sports is incredible, and the network, obviously, the Fox, but it's incredibly important to them as well. So the NFL becomes this key property for both Fox and CBS, and then this question of, will Amazon really come to play? Will Facebook or Alphabet? It's hard to imagine that the NFL still won't have a home on these major networks, but will there be deals that are different in a way? That they hive off certain things, and you still have to pay a lot more for it.
Right, but the numbers are excellent this year. We should talk about that this is not something that is in a declining asset. The numbers are good.
No.
So it's key.
The NFL is what distinguishes them. That's at least what some who are critics of this deal would say. It's still about CBS's and Viacom CBS's ability to have sports programming. The NCAA also. Very important.
And don't forget, the Masters.
Masters is huge. I saw Phil Simms on the floor earlier today. Yeah, it's hard. Football coverage is hard. Hard to do well.
Yes, it is.
We know this.
Tony Romo's, the guy, he's an impressive figure. Look, I think that the quality of NBC, CBS, and Fox football is really rather extraordinary. And they represent the product in a way that the NFL loves.
Well, maybe one day we'll find out if streaming services can come close to that. Yeah. The big blow-up of the day, of course, Jim, is Sage Therapeutics. This depression drug did not meet the phase 3 endpoint. Pre-market shares were down 64%.
Yeah, no, I have had I've had Dr. Jonas on several times because it's a very important drug. And can I just say that major depressive disorder, MDD, source of course, obviously a lot of suicide, may be the toughest other than Alzheimer's. We're going to hear soon from Biogen. Maybe the toughest. And I know that Allergan has Vraylar, and the numbers there are very good. It's up 70% year over year, Allergan being bought by AbbVie. But this was supposed to be the magic bullet because they had some stuff against postpartum depression. This is a very bad blow because people need this, and it just didn't do the job. Hard illness, major depressive. But the Allergan one is good. People should watch it. It's real.
It's going to take you back to October of 17.
Before they got the approval.
But biotech is not for amateurs, Jim, right? You would say that.
At the same time, David didn't even get to tell a story about a $3 billion deal. That was actually a very significant deal because it's one again. What we're hearing over and over again, farm team, biotech farm team.
Stellis's purchase earlier this week at 100% premium. I mean, the moves in biotech are that way. When your company gets taken out, oftentimes it's premiums you can't even imagine.
Glaxo.
And at the same time, when there are disappointments, it is punishing, particularly when it's one drug.
A lot of people feel that we don't know whether the FDA told Biogen to go ahead, please, because Alzheimer's is such a terrible illness. But major depressive, suicide is an epidemic in the country. Not unlike opioid. Opioid and suicide also involved. And this was a hope. It was a big hope, and it didn't pan out. Alkermes had the same problem. It's not panning out.
We started the morning talking about Oscar Munoz leaving as head of CEO of UAL. We've talked C-suite shifts at Google, at Expedia, and today Macy's. As Hal Lawton is leaving to run Tractor.
We got to talk about this. Hal Lawton is one of the great. What?
Earlier you were like, huh? And now,
because
now you're all over it.
Look, even Frank Blake, the legendary turnaround artist at Home Depot, said Al was number one in retail. If you go back to the Macy's conference call, which, by the way, was not well applauded, right?
No.
Because the numbers weren't that good. Gannett actually literally at one point turned it over to Lawton because he said he's really the man behind all the initiatives that are going to save us. The destination businesses, Backstage, the Growth 150. He gave it to Lawton to talk about.
And now he's going to sell tractors.
David, Tractor Supply, when I go with you to my Tractor Supply on Route 202,
yes,
you're going to end up buying Carhartt clothes that you'll wear on Fridays, along with Wilf when he takes his tie off.
That's Frost, Wilfred Frost.
Yeah, right. Well, and I just tell you that Tractor Supply is far more than tractors. Matter of fact, it's not really tractors. It's what you do if you're a gentleman farmer. It's what you do if you do anything. See, you don't go outside. It's supply. It's gloves. It's
gloves.
It is Amazon proof. A lot of
they
people
sell
feel
socks.
Like, yeah,
this is a good pair of socks.
But you know what they really do? They have veterinarians. I use the veterinarian, Dr. Chris, in my 202.
In all seriousness, it is a far larger market cap company than Macy's.
Well, some people say it's sinking ship. Some people knew that Lawton was the bright light.
It was once the key to this market, Tractor Supply. I remember those days.
Those were the great days. But I can tell you that the compliments that Gannett paid to Lawton on the last conference call make you feel like,
Yeah, only had been a couple of years since he was brought in from Silicon Valley. Meantime, GM and LG Chem joining forces, as we said earlier, to build a new battery plant near Lordstown, Ohio. Our Phil LeBeau has that in another First on CNBC interview. Morning, Phil.
Good morning, Carl. Let's bring in Mary Barra, who is chairman and CEO of General Motors, as well as Hakshor Shin. He is the CEO of LG Chem. They join us from the GM Battery Lab in Warren, Michigan. Mary, let's begin first off with you. This joint venture, you guys talked about it with the UAW, that you were thinking about building this. How long did it take to put this together, and how important is this to the transition GM is planning for electric vehicles?
Well, I think this is incredibly important to the transition to electric vehicles. And as you know, Phil, General Motors believes in an all-electric future. And so this is a critically important part to make sure that we have high-quality, reliable electric vehicles that are also affordable. So we're very excited. And the deal came together quite quickly because of the long relationship that we have with LG Chem. We're very proud of that, and we're honored to be announcing this joint venture today.
Mr. Shin, where are we in terms of the industry moving the cost of electric vehicle batteries lower to the point where it's not a huge difference between an EV and an internal combustion vehicle? Because many people believe we're not going to get there until 2024, 2025 at the earliest.
First of all, LG Chem is very pleased to be associated with General Motors to launch this historic joint venture. I think what we can do is we can bring the best battery technology known to mankind to General Motors together. I think what that does is to help GM, and by working together to create all future electric vehicle dream. I think we can do that by way of bringing innovation and research and development, bring the cost down, as you mentioned. I think there's a technology solution to enable that, and there's obviously a component of productivity element of making things happen through joint venture with General Motors.
I have to put you on the spot. Would you target a date when we see these EV batteries bring the cost down under 100 kilowatt per hour?
Yeah, we are working together diligently. I think one of the objectives of General Motors JV is to bring the cost down. So I think within a couple of 3 days, we'll be in full operation, batteries will come online, and we'll see a lot of progress in the areas that you mentioned.
Mary, you've got an all-electric pickup scheduled to come out in 2021. Your competitor across town, Ford, they're also planning to roll one out. You saw Tesla roll out its Cybertruck, just a few weeks ago. How big will the electric pickup market be, in your opinion?
I I think it can be very significant if we stay focused on the customer. We have to make sure that we understand what an electric pickup truck driver is looking for, and that's what we're intent on doing, building on the tremendous knowledge we have of the pickup truck market. So really identifying and focusing on the customers the way that I think that market can be very significant, and we're excited in the not too distant future to share what our entry will be. And as you know, we've confirmed that we will be launching in the fall of 21.
I know I usually don't ask you to comment on competitors, but you've seen the Cybertruck. You saw the unveil. What's your reaction? What did you think of it?
Well, I think it's the customer's decision to decide, not General Motors, certainly not me as the CEO of General Motors. What I can tell you, though, is I couldn't be more excited about our battery electric truck, and I think it really it capitalizes on all of our knowledge of trucks. So I'm excited to get the reaction from that.
One last question with regard to pickup trucks. Alex Potter, the analyst from Piper Jaffray, out with a note earlier this week talking about the future of electric pickup trucks. And he says this: the more we began considering the possibility, of talking about electric pickups, all other pickup trucks might actually be pretty crummy. I mean, he's basically saying your Silverado, it's a crummy truck in his opinion, and not just you, but all other internal combustion trucks. What's your reaction to that statement?
Well, again, I think we have to look at what the customer wants, and the customer has shared with us that whether it's the Chevrolet Silverado or the GMC Sierra, both light duty and heavy duty, it is meeting their needs from a functionality that truck provides. But we're also seeing people wanting to drive trucks because trucks are cool, and so I think there's a world where both will exist for a very, very long period of time, and we're excited to be in a leadership position as it relates to the overall truck market, and we think we have a very strong battery electric truck that will meet consumers' needs, and I think that's how you win.
And that's next 2021, correct?
Correct.
Mary Barra and Hakshor Shin, who is the CEO of LG Chem, joining us today, first on CNBC, guys, from the GM Battery Lab in Warren, Michigan. They're going to be adding 1,100 jobs in Northeast Ohio for this new battery cell production plant. Guys, back to you.
All right, Phil, we appreciate you bringing that to us. Our Phil LeBeau. Jim, does it alter your view of GM in the near term?
I think that this is one of those that you're guilty till proven innocent now in this industry. And I think that's a shame because it's a great industry. It provides a lot of jobs. As you mentioned, 1,100 jobs. I don't know if they can find people in that area. You know, the unemployment rate's so low in some parts of the country. But no, I can. I hope. Remember, Panasonic builds the battery since 2008 for Tesla. And they've been the best in show. I need to see a step function, not just in price, but somehow in distance, because it's still the biggest bugaboo for people who want to take a trip from New York to Washington, New York to Philly.
Right, get that miles per charge.
Don't want that
range anxiety.
Range anxiety. I have road rage and range. Remember the road rage anxiety I had when I was driving crazy? Oh, never mind, it's in the book. But it has to do with the guy. So you never know who has got a gun in the glove compartment. I said, no, I'm the guy. Look in the glove compartment. Well, it was a different time.
Dow's up actually 3 points now. He lost to some of the early gains, and the bond market's active as well with some data on the way. Let's get to Rick Santelli at the CME. Hey, Rick.
Good morning, Carl. You know, we all were highly aware that today initial jobless claims and continuing claims would have distortions due to Thanksgiving holiday, especially so late in the month. But having said that, look at an intraday of twos. You see the way it bottomed? Well, it bottomed and yields started going up right after the release of initial jobless claims. And it was a very good number, 203,000. That's the next lowest since April, when we were at lowest level since 1969. So it is good news. Most likely there will be a revision. And pretty much the whole curve looks just like that 2-year note chart. And it's basically a parallel shift on the curve, meaning, you know, we're up about 3 basis points from 2s all the way out to 30s. The 10-year in particular really gives us a nice glimpse of what we should be paying attention to in a market that really seems to have a hard time, a struggle to push yields higher as we go into the end of 2019. So this chart starting in late October gives you a nice view. You know, we're buffeting up against that 169 close, which, you know, it's obviously good support because we're holding it. That was on Halloween, but it really isn't that big of a technical but we are consolidating in the range, and we kind of circumvent right around that 1 3/4 area. Finally, the dollar index. Right now, it's down exactly 1/5 of a cent, and this looks to be the 5th session in a row the dollar index is going to close lower. Even though the moves aren't large, another 3/4 of a cent, and it's really going to break down below a zone that we haven't seen in several plus months. Carl, Jim, David, back to you.
All right, thank you for that, Rick Santelli. Let's get to Bob Pisani as well, see what's moving. Hey, Bob.
Morning, guys. Happy Thursday. Started up kind of flattish right now, but early on, the cyclical sector is doing well. Banks started in the positive territory. Yield's been up 2 days in a row. That usually helps banks. Retail's also bouncing a bit. Again, these are cyclical, semis, transports, leadership group. Oil and gas having a good day. Remember, we've got that OPEC meeting. They're weighing reportedly deeper output cuts. That's helping oil up about 1% today. What's moving the markets? Remember the 4 factors that have been moving things. I want to comment on this today. The Fed has been neutral and been buying treasuries since October. Yeah, don't call it QE, but they've been buying. The consumer's been strong. The trade outlook a little uncertain, and the global economy very mixed. So 2 big positives here. One sort of still a bit of a question mark. Global economy bottoming. We just don't have the answer to that. So 2 uncertain ones, 2 powerful ones here. I want to concentrate on this Fed and buying treasuries. I've noted this several times, and a lot of people feel that the Fed actively going out and buying treasuries once again. $60 billion a month has been a major factor. Here's when they started it. This is October 11th. And you'll notice the market essentially has drifted up since then. Now, correlation is not always causation. There are other factors here. Obviously, trade headlines matter, and some other perceptions about the global economy matter. But that is not a complete coincidence, and a lot of people feel the Fed's very important. The whole market has lifted since that October 11th date. If you look at bank stocks, for example, yields have generally been higher since that. Here's the KBE. Same situation with bank stocks sort of moving up and plateauing in the last few days. Technology stocks in particular, a big important part of the market, has also lifted. So tech's up about 8%. Again, same pattern here. And you can look at healthcare. It's the whole market has moved. And that's why a lot of people feel the Fed movement here is a very important factor in the rallies that we have been having. We have had a great year. Not a good year, a stellar year. What's a stellar year? Well, the S&P is up 25%. That's a stellar year. This is the best year for the S&P since 2013. Where does that fit in the overall history of things? This is the 8th best year since 1957. Why am I picking 1957? Because that's when the modern S&P 500 came into existence. The 500 as we know it. 8th best. So everybody knows this, right? We keep talking about it. Apparently, a lot of people don't. Financial Times had a great story today. They went out and did a poll of 1,100 voters, and they asked a simple question. Is the stock market up this year? Is it down this year? Or is it flat? That's it. Just a simple question, up or down. Here's what they found out. 40% of the voters thought the market was up this year. Good guess. They're right on that. 42% said the market was unchanged. 18% the market was down. Now, this is sort of hard to believe. 60% of the voters think the market is flat to down on the year. You kind of wonder, what kind of rock is everybody living under here? The subtext of this story, it appears to me, is that a lot of people aren't paying as much attention to the stock market as everybody thinks they are. The president tweets about it. We think it's very important, obviously, but a lot of other people may not be. And this goes to all sorts of questions about what really matters in terms of people's lives and how things impact them. We think that this is important. A lot of other people apparently aren't that aware of what's going on. Guys, back to you.
Interesting, Bob. Don't all people always see the market in the same way, Jim?
Well, I know. I mean, I got to tell you, I had Robinhood on the other day. I spent a couple of years ago with them. They had 1 million accounts. Now they got 10 million accounts. Admittedly, the accounts are
time last night?
But boy, there's new interest. Millennials want to own stocks. I think that we're talking this cohort that got burned in 2008. Whole new group coming out. They like it. They want to buy Amazon.
We're talking not just cannabis names. They want to buy.
They're buying Amazon. They're buying Facebook. They're buying FANG. They're being well thought out. They're buying stakes in America. Robinhood gave me hope that there could be, that I'm not a troglodyte, that I'm not a tough triceratops. You velociraptor, you.
Aren't they focused on sustainability?
Very much so. That's key in their insight. Yeah. I have a company tonight on Chipotle. It's only because they have it. That's sustainability. They love to buy the stock of Chipotle.
All right. By the way, be sure to check out our podcast. You can listen to the opening bell hour, this hour of Squawk on the Street, wherever you hear podcasts. Dow's down 8. We're hanging on to 31.15.
The Bond Report.
Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile. Like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
If you're on the way home from work, why not go to Boots.com, where you'll find thousands of fantastic gifts to choose from, like Florence by Mills to Lancome. If you order from Boots.com, you can collect from a Boots of your choice, such as Boots in London White City Shopping Centre. What better way to shop when it's cloudy and cold like today? So gift like you get them at the fantastical choice of thousands of gifts to order and collect boutique. Charges may apply. See Boots.com for details.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Hey, how's it going? My name's Brian. I do graphic design over at TuneIn. Just wanted to say thanks for listening. We really appreciate it. Hopefully you like what you're hearing. Have a happy holiday. Have a happy New Year.
It's Liz Hernandez with your TuneIn Music News Update. Contact Music claims Louis Capaldi is canceling concerts because of vocal cord issues. If he performs, he could cause permanent damage to his throat and cords. Someone else who's been on a leave of absence from the stage is Shawn Mendes, and he recently walked out on a hotel balcony in Brazil in his black boxer briefs, and fans went wild. To hear more music from Shawn Mendes and Louis Capaldi, search today's hits on TuneIn.
NFL fans, hear every live game on TuneIn Premium.
Running down the sidelines and running in for the touchdown. And it is good!
Today, hear the home and away call as the Dallas Cowboys visit the Chicago Bears at 8:20 p.m. Eastern.
It's a block, easy touchdown, a walk-in touchdown. The third time's a charm.
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
S&P hanging on to gains by just about 2 points or so. Breadth pretty evenly split as we get a break more or less from the roller coaster of trade headlines the last couple of days. Get Stop Trading with Jim after a short break.
It's college football conference championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
On the goal line, scores! It takes it home!
Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
Hear the action live on TuneIn Premium.
Move, and a shot, they score!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today. To LeBron, slam dunk!
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Kawhi Leonard and the Clippers are in Milwaukee to take on Giannis and the Bucks.
Hart pulls back, trying to make it 11-2. Kawhi Leonard is all over the place.
This Friday, the LA Clippers are at the Milwaukee Bucks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
We can't make traffic move faster during rush hour, but we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
Time for Jim and Stop Trading.
When Lowe's reported, Marvin Ellison, great call, talked about how they were expanding a relationship with Yeti. Talking about Yeti being the best-in-class brand for a series of things, not coolers, equipment, and drinkware. Well, sure enough, Goldman runs with it today and takes it to a buy. Now, what's most significant about this? 37% short. Yeti at one point didn't have a great balance sheet. A lot of people felt that Yeti could be a commodity. Well, Goldman is saying this is no commodity. It's breaking out. It reminds me of when the old Rubbermaid, when people realized, wait a second, you go into Walmart, they got all these Rubbermaid products. Yeti, it's a buy. Goldman probably works given the short position and the Lowe's deal.
Yeah, interesting. Chewy, Yeti, and Nike, three big upgrades.
Yes. No, the research says really is taking a very active role, Nike being the leader. Oh. Great piece.
Tonight on Mad?
Okay, so we have service now. It's Bill McDermott and late of SAP. It's really is the opening, the premiere. We've got Chipotle. I mentioned Topo Chico just as a prop, of course, not an endorsement. But what's going on at Chipotle is rather remarkable. Fastest turnaround I've ever seen from the depths of despair. And then, I've got a company that people do not talk about enough, Edwards Life Science. They've made people's lives so much better, lengthened lives. Remember, they have the thing that says you don't have to crack the chest cavity to fix your heart. Well, there is an innovation. Which would you prefer, Dave? Cracked chest cavity or maybe a little thingy?
Yeah, I like the little thingy. Every time.
Jim, we'll see you tonight on Mad. That's a lot to chew on. We're essentially unchanged, S&P and Dow. When we come back, France vowing retaliation as the White House proposes some new tariffs on French goods. We'll talk to a leading U.S. importer of French cheese, and also Santa's here. Back in a minute.
At Lidl, we're big on the sweetest Christmas and those happily ever afters, like our winter warmer deluxe mince pie strudel at just $2.99 and our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
What's the sign of a really first-class funeral directors? Is it how they're with you every step of the way? Is it the care they take looking after your loved one? The superb organisation they show on the day itself? The thoughtful little touches you maybe weren't expecting? Yes, it's all those things. But there's another sign you should also be looking for. The one that says Dignity. You'll find it on every one of our branches and on the Dignity website. When you see it, you'll know you couldn't be in better hands. Dignity Funeral Directors. Taking the greatest care.
Hi, my name's Andy Woodhull. I'm on the content team here at TuneIn. Listen to TuneIn to find the best audio content out there. It's top-notch stuff. I just want to wish everyone a happy holidays and a great new year.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
We can't make traffic move faster during rush hour, but we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
Welcome back to Squawk on the Street. Rick Santelli here live in the Florida CME Group with the last of the breaking news of this session. October read on factory orders up 0.3, exactly as expected, though we lost 0.2 on a revision from down 0.6 to down 0.8. Strip out transportation, a solid up 0.2. Same scenario, though, lost 0.2 in a revision. Minus 0.1 now stands at minus 0.3. Now, when it comes to durable goods, we're replacing a mid-month read. So this is the final October read, and it's up 0.5. So the up 0.6 placeholder gets removed sequentially. This actually follows down 1.4. So it is a solid number when you look at it sequentially. Now, ex-transportation, it's up 0.5. The mid-month read was up 0.6, so a little give back there. And finally, capital goods orders, non-defense ex-aircraft, proxy for business spending. And this is an important one because our mid-read was 1.2. Now, it is 1.1. So it really held a good chunk of the gains. And the most fascinating part about that is sequentially now it follows up 0.5%. So over double on the proxy for business spending, which is really part of the secret sauce many believe the economy is missing. Carl, back to you.
All right, pretty good, Rick. Thank you, Rick Santelli. Good Thursday morning, everybody. Welcome back to Squawk on the Street. I'm Carl Quintanilla with David Faber and Leslie Picker, who's in for Sarah Eisen here at Post 9 of the New York Stock Exchange. Lost some early gains. Dow's down about 21 points right now. S&P down a point to 3111. Pretty busy day full of headlines from retail, oil, biotech, and more.
And that's where our roadmap today begins with the market volatility. Stocks moving lower from their strong open with the S&P on pace for its worst week since September.
That OPEC summit's kicking off in Vienna today with big implications for oil in play. We're going to take you there live for the latest.
And Elizabeth Warren taking on mega mergers. We're going to have the details behind her proposed legislation that could have big implications for American companies.
As we said, stocks moving a bit lower this morning as investors continue to closely watch the trade tea leaves. Chinese officials do remain relatively quiet amid this growing uncertainty about whether a phase one deal can be reached before year end. Joining us this morning, Charles Schwab Investment Management's Omar Aguilar and Northwestern Mutual Wealth Management's Brent Schutte. Guys, good morning. Good to see you both.
Good morning. Thank you for having us.
Omar, coming off of this non-defense ex-aircraft order, claims pretty good. It sounds like your thesis of global stabilization is playing out.
Well, it sounds like, so far all the hard data seems to be supporting, what the central banks have been working on all year of keeping, the manufacturing weakness away from a potential recession. And so far, the hard data on the economy seems to be solidifying those things that so far that hasn't affected the labor market, hasn't affected business spending as much as it used to or people thought it was going to be. But overall, it seems like the hard data on the economy seems to be pretty resilient, consistent with what is called a soft landing of what the Fed and the other central banks may want to have for the global economy.
Do you believe that kind of stabilization can survive if phase one is pushed out to, say, the spring?
Well, I do think that that's the key component, and clearly trade has become a bigger component because it does have an effect not only on certain parts of the manufacturing part of the world and clearly will affect potential wage growth, but it also affects what is the critical part of where we are in the market today, which is sentiment. The sentiment component of reaching a potential deal could actually be a big tailwind for the markets going forward. I think, consistent with hard economic data, a potential deal, I don't necessarily think we're going to get to a big deal, but certainly a progress could actually be a tailwind that will take risk on markets even further up. On the other hand, if there is no progress or potentially a break in negotiations, that could actually, put us to the other side. We're in that part of the market where because we have had a solid year, it could actually go one way or another. So I think, looking for that December 15 and a potential phase one progress is going to be key for where the market goes, at least in the short run.
And Brent, do you expect to that point to see higher volatility as we reach year end?
Sure. I think in general, there's usually higher volatility as these trade uncertainties unfold. And so December 15th is certainly a big date on the calendar. And I actually do think you will get a phase one deal. A lot of the news about, the president suggesting that he would be happy putting this off to the election, I actually think that was for phase two. And I think that gives him some room to actually suspend negotiations next year a bit to tamp down the volatility from the negotiations. But I do think he needs phase one done because I think he needs something for his constituents, see the farmers, that he needs to take to the election to give them something. Otherwise, they might wonder what this was all about.
Okay, so 10 days he has to get this phase one deal effectively completed. How much do you think the markets are pricing in that will actually occur? And what is the downside risk that you're seeing if that doesn't come to fruition?
Sure. I think the markets have certainly priced in positive news on the trade front, so I do think there would be some downside. I don't think it's nearly as much as people imagine because, as Omar mentioned, the opposite side of the coin, which happened last year, is happening this year. You actually have all those central banks around the globe that were pushing down with trade war last year are now pushing back up. And I do think they hold the upper hand in that battle because they are much, much bigger and much more important than the smaller trade war that may occur. I think it's a detractor to growth, but not an absolute negative and not a recession causer.
Omar, in terms of sectors, I mean, assuming, given the sort of the bedrock we just established with both of you, how do you play it both within sectors in North America and when you compare U.S. to, say, Europe and Asia?
Well, I certainly think that, this is a great opportunity for people to look at their portfolios and start thinking about rebalancing strategies. We're coming off of a very good, solid year for the equity markets. We actually see, the consistency in fixed income markets as well, where things seems to be very stable. So what we have observed over the last couple months is this natural rotation in this part of the cycle going from a very defensive, momentum type sectors to a more, potentially cyclical. I would not necessarily say we're at the point where value starts to work harder and that you can actually have to go there with your 2 feet. But certainly it's an opportunity to balance the strategies and we start going into cyclical areas like industrials, like materials, like consumer cyclicals, where you actually have seen potentially underweights over the course of the year. And those are sectors that could potentially expand, conditional on the fact that the economic data continues the way we laid out. So, moving and start rotating away from defensive into cyclicals is something that we continue to encourage people to do.
And Brent, similar rotation with you?
Yeah, we like small caps within the U.S., so we've increased the cyclicality of our portfolios in the U.S. by moving from large caps to small caps and shying away from REITs pretty heavily. The thesis there is that last year, if you looked, certainly the central bank was tightening. We were kind of at a point where small caps have been overloved because they were thought to be a defensive play against the trade war. And the macro environment was turning against them with real rates becoming positive. Now you look, they've underperformed for a year dramatically. The macro environment is turning positive where I don't think there's any chance next year, even if the economic data improves quite a bit, the Fed would ever consider hiking rates just given the president and Bill Dudley's back in force. And so, I think that's small caps. And then I also would note that one thing that's been underappreciated is the world is getting better. Chinese OECD LEI turned back in February. You're seeing that show up in the data. And so if you have better global growth next year, the world will outperform the U.S., which we think is likely.
Interesting. On a day where Japan launches $100 billion in stimulus. Omar, Brent, thank you guys. Appreciate that very much.
Thank you. Thank you.
Meantime, our Phil LeBeau spoke with GM CEO Mary Barra in the last hour. This on the heels of the company's battery joint venture announcement. He joins us now. He's got some of the highlights from that interview. Phil.
David, this is a move that General Motors talked about making back during the UAW negotiations. Here's the joint venture details. This is a joint venture between General Motors and the Korean battery manufacturing company LG Chem. They're going to locate a battery cell production facility in Northeast Ohio. May not be in Lordstown, but it'll be close to there. They're going to invest up to $2.3 billion, add 1,100 jobs. Here's Mary Barra talking about the importance of this plant just a few minutes ago.
General Motors believes in an all-electric future. And so this is a critically important part to make sure that we have high-quality, reliable electric vehicles that are also affordable.
As part of that all-electric future, there will be an all-electric pickup truck coming from General Motors by the end of 2021. I want to shift gears here and talk a little bit about United Airlines because there has been a transition announced when it comes to the CEO job. Oscar Munoz, who has been in that position since 2015, will be moving into a new role starting in May of next year. He will no longer be CEO. He will become executive chairman. Replacing Oscar Munoz is Scott Kirby, who is the current president of United Airlines. He was hired by Munoz to come in, really start fixing their route structure and improve their profitability starting in 2016. So Scott Kirby, will become the CEO starting in May of next year. As you take a look at shares of United Airlines, keep in mind that among all the airline stocks this year, while this may not look like the most impressive chart, relative to a number of the other airlines, guys, United has had a pretty solid year relative to their competitors. Guys, back to you.
Wow, there's been so much going on in airlines this year, Phil. Thanks very much, Phil LeBeau. Still to come this morning, we'll tell you what's behind this massive drop in Sage Therapeutics, down more than 50% this morning. First, though, our Brian Sullivan live in Vienna with a look at what else is ahead in the show regarding OPEC. Hey, Brian.
Hey, Carl, guess what? You know what airlines need? Phil just talked. Airlines need oil, by the way. So we're going to talk about oil. And coming up after the break, going to give you 2 reasons to watch. Number one, we're going to lay out the 3 OPEC scenarios and what they likely mean for pricing. We're not going to get fancy. We're just going to lay it out and say, here's what's probably going to happen. Number 2, we're going to show you the world-famous OPEC stairwell, which even has its own Twitter account. The rumors are flying fast and furious. And we'll have it all for you right after the break.
There's a lot of talk about value out there, but at Fidelity, value is more than just talk. We offer commission-free online U.S. stock and ETF trades. And when you open a new Fidelity brokerage account, your cash is automatically invested at a great rate. That's 21 times more than Schwab's. Plus, Fidelity's leading price improvement on trades saved investors hundreds of millions of dollars last year. That's why Fidelity continues to lead the industry in value while our competition continues to talk. Fidelity.
Grubhub, America's leader in food delivery, just got better. Introducing Perks, millions of dollars in deals and free food nationwide. Download the Grubhub app today and get free delivery on your first order.
Either you learn to run your business or the business is going to run you. You can't be the sales department, research and development, and the engineering because something's going to give.
The Profit, all new, Tuesday, 10 Eastern. CNBC, get yours.
We did get too complacent. Stocks did need to come down to more enticing levels. Now, you have to be careful because these kinds of moves can be brutal. And more important, they can be longer lasting than the typical dip.
I finally got to start my career, except that I was spending thousands of dollars on interest on my student loans and I needed to refinance. And then I found Credible.com. Within just a few minutes, I had actual rates from lots of lenders. Now I'm saving thousands of dollars and I'll be out of debt much sooner. And I can focus on my future. It was so easy, I wish I had done it years ago.
Visit Credible.com to see how much you could save on your student loans.
Giving away this holiday season makes us feel all the feelings. Generosity, love, intense jealousy. Especially if you're Matt L., who said, I bought the large suitcase for my girlfriend and I'm hugely jealous of it. Hers glides effortlessly around airports, hotels, and cobblestone streets while I'm stuck hauling mine around like a Neanderthal, dragging a bag of stones. Might I suggest the green bag for you, Matt? Envy suits you. Roll on over to awaytravel.com because this holiday season, everyone wants to get away.
The eyes of the energy world focused on Vienna, Austria right now because OPEC is meeting there to decide if it will continue the current round of production cuts or perhaps do something a little more extreme. Brian Sullivan has more on where everything stands right now. Brian.
Yeah. Hey, David, you ever see the movie, the Daniel Day-Lewis movie, There Will Be Blood, about oil? Well, I think the OPEC movie should be There Will Be Rumors because that's what you get here. That somebody said this, but then this delegate may have said that, and who's going to do what? All right, so I want to lay out exactly what the three scenarios are and what is likely to happen with oil prices. Number one, you got a current production cut deal of 1.2 million barrels per day that expires soon. If they just keep that along, oil's probably going to fall. That's a bearish view. Everybody we talked to said if the status quo stands, you're probably going to have oil prices fall. Scenario number two, you extend the current 1.2 million barrel a day cut through the end of 2020. So it goes all next year. That's probably neutral to also bearish. I'll get to why in just a second. And then there's option number three, which is being floated around, which is deeper cuts, maybe 1.5, 1.6 million barrels a day, all the way through next year or until the summer. That's probably mildly bullish. That would likely be, guys, the only scenario where you see the price of oil after today's meeting actually go up 1.5, 1.6, and for at least 6 months. Anything other than that, oil's probably going to be flat to slightly down. Why? Because next year you got 350,000 more barrels coming online in Norway. Their new field is active. The U.S. production continues to rise. Okay. This is the world famous OPEC stairwell that we always get jammed into. It's even got its own Twitter account now. And why are these people lined up? I don't actually know. There's not a press conference this year, guys. Every year there's usually a scrum. They canceled it on us. I don't know why. Everybody says the Saudis just don't want to talk. But people still gather in the stairwell because when you don't know what to do, you just follow what everybody else is doing and get in the stairwell. So if there is some kind of a scrum, we'll be there. Otherwise, we'll be right here for you, covering oil from a stairwell in an office building in Vienna, Austria. Where else?
Brian Sullivan questioning some of the key mysteries behind the OPEC meeting in Vienna, including why everybody stands in a stairwell. Brian, thank you. We are now joined for more on this by Jeff Curry, Goldman Sachs' Global Head of Commodity Research. I won't ask you about the stairwell. That was pretty funny. But I will ask you, what are your expectations in terms of what we're going to get out of the meeting?
Well, I think that the current agreement being discussed is really formalizing our base case as well as the rest of the market's consensus base case. And there's three components to that. One is they're likely to adjust the quotas to current production. Second, that's going to be contingent on better compliance from the producers that are cheating. That's primarily Iraq, Nigeria, Kazakhstan, and Russia. Russia and Iraq have already agreed or have moved their production to the quota levels in November. So I think we resolved that. Kazakhstan has maintenance going on. Now, the third is the extension of the cut that Brian was referring to. It's likely to go through the at least June of 2020 and further. Now, why is that important? I think, as Brian alluded to, you have a big surplus coming to this market during the second quarter, primarily driven by production that doesn't have much following behind it later on. Why? Because CapEx is down in non-OPEC ex-US. Those are legacy projects from 2014 when we had $100 oil. Second, CapEx in the U.S. shale patch is going down, so there's really nothing behind that. So if they can weather that storm in 2Q, they can get to the backside of it. Things look much better. Then they can talk about raising production after that. Now, what does this mean to prices? It can't go that high because this market is not that tight right now. So they need to force that rebalancing, and that drop in CapEx is what they want. They don't want that CapEx going back up again. Keep the CapEx low and declining, then they get free sailing on the back end.
And how about the demand side of the equation here? I mean, you look at what's going on with the U.S. and China and, back and forth every single day. Does that factor into the calculus at all?
When you look at the demand for commodities, fall in two buckets. What we call OPEX demand, that's tied to the new economy, and then there's CapEx demand that's tied to the old economy. CapEx demand is hurting, OPEX demand is going well, just like the global economy is. When we think about oil, it's primarily an OPEX commodity, jet fuel, gasoline, and so forth. As a result, the outlook for oil is much more positive than it is for something, let's say, like nickel or zinc.
As an S&P sector, oil's on the verge of going negative today for the decade.
Right.
Since New Year's Eve of 2009. Yep. You think that's going to be different in 10 years?
I like to point out, you take Apple, it has a market cap bigger than the entire energy sector right now. Guess who was the first $1 trillion company? It was PetroChina. These things go in cycle. Now, the odds of you getting back to that in the next 10 years, I think, are very, very difficult. I mean, we're talking way out there. But I think it illustrates a more important point in the commodity space. Capital to this sector, the old economy, is shut down right now. Why? Because I'd like to point out, the old economy, while it represents 35% of global GDP, 2/3 of corporate losses, 90% of the non-financial leverage in the system, 80% of global emissions. So it is overbuilt, over-levered, and over-polluted. And what we're seeing right now is the rebalancing that's really needed. So when we look at the decline in the ISM, the manufacturing declining, this is that rebalancing. I like to say, embrace the decline in manufacturing, don't fear it.
You mentioned trillion-dollar companies. There's another one I can think of that will be very soon, Saudi Aramco, which is going to be pricing, when is it pricing now, Leslie? Right
tomorrow.
Today, right?
Yeah.
How important sort of is that in the overall view of what the Saudis will have to do in terms of OPEC, and how important it is to have a public equity out there for them, even if it only trades in Saudi Arabia for now?
Well, I think it's a milestone in terms of their ability to diversify the economy and go after the Vision 2030. Now, in terms of the linking the two, it's more of an end of year issue, because what happens to this OPEC meeting and oil price in the near term is not going to change investors' long-term view on commodities. I think the bigger issue is the point that you just brought up, which is the fact that old economy equities, whether if it is energy, metals, and mining, are out of favor. And I think that the one thing that's a big driver of that is not only the poor returns, but ESG factors are very important right now. In terms of thinking about the ESG factors, what's the easiest target to go after? Fossil fuels, metals, and mining. And when we think about ESG in 2020, in June of 2020, the UN PRI, which is Principal Responsible Investing, is going to suggest, it's not a law, but suggests that 50% of the signatures incorporate ESG strategies into their investing. That's going to impact $45 trillion of AUM. That is up from 22.5 this year, again to 45 trillion.
I'm glad you raised it. It's an enormous issue, one where you have to start covering more closely. I wonder, though, who's going to be the first fossil fuel company to do something dramatic in terms of responding to that?
Well, when you look at some of these producers out here, they're making large efforts. In fact, the Norway field that Brian was referring to, it has a 4% carbon emission leakage, 4% of what the other fields do. So you see the response out there.
But they're really good at that, aren't they?
Yeah, they're very good at it. They've made big strides. But I think that you're going to see that. I've had talks with miners suggesting green copper. Yeah, it's going to be expensive, but you are seeing an emphasis towards that. And I think the bigger issue there really is how long does it take to create that environment to absorb that capital? I think in the meantime, it's going to be a very difficult environment in 2020. Now, man, it's difficult for equities. We like the commodities. And the reason we like the commodities, dropping CapEx takes supply out of the market. Metals last year had the worst demand environment since 2008, 2009, yet inventories are normal because supply is dropping faster than demand.
Jeff, we got to leave it there for now, but interesting conversation. Thank you.
All right. Thanks for having me.
Jeff Curry from Goldman Sachs.
Still to come this morning, Elizabeth Warren taking on mega mergers. We're going to take a look at the presidential candidate's potential plan with big implications for American companies and investors when Squawk on the Street comes back. Dow's down 55.
Most people think of Verizon as a reliable...
How many tours till Christmas? You know it's not far off when the Advent calendar goes up. At Asda, we've a great range to choose from, including Maltesers and Galaxy calendars for just £2 each. And our Asda Free-From Advent calendar, just £2.50. Asda, let's make Christmas extra special. Selected stores subject to availability, 93 grams to 110 grams.
The spacious Vauxhall Grandland X is available for £299 initial rental and £299 a month. Great when you have lots to fit in. Like now. Personal contract hire on Grandland X SRI NAV 1.2 130 PS. Subject to status, T's and C's 18+. Initial rental $299 plus 47 months at $299. 32,000 total contracted mileage. You will not own the car. Vauxhall Finance Leasing. Availability is limited, so search Grandland X offer or visit your local Vauxhall retailer now.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Want to power through your projects for less? Get 20% off power tools at the B&Q tool shop. Like the Bosch 18-volt 2-battery combi drill. Was £80, now only £64. You can do it when you B&Q it. Excludes DeWalt 18-volt 4-amp combi drill, Dremel 3000 15-piece and power tool clearance. Ends 24th November. In-store only on 23rd and 24th November, subject to availability.
Hey, this is Andrew Bach, Director of Content Operations at TuneIn. Wishing you and your family the happiest of holidays. Thanks for listening and all your support. Stay with us Christmas Day for all your NBA action. College football playoffs right around the corner. Happy New Year. Wishing you the best in 2019.
It's Liz Hernandez with your TuneIn Music News Update. Ed Sheeran tells Entertainment Weekly magazine that a rapper convinced him that he didn't need a band. Ed says, "There's a rapper in England called Registry 2, and I remember when I was considering getting a band. He was like, when I do shows, all people want to do is come and sing your song back to you. They just want to scream it at you and have a good time. So my way of entertaining is making sure that everyone is involved at all times and sing and dance and have fun." To hear more music from Ed Sheeran, search today's hits on TuneIn.
'Tis the season for lights, presents, gingerbread houses, and, most importantly, news. TuneIn has commercial-free news from MSNBC, Fox, CNN, and CNBC with TuneIn Premium.
It's an update to a story we brought you yesterday. It's the toe-to-toe battle.
Starbucks, which almost never gives out anything.
Which is also listed in Syria at about 1 billion.
Let TuneIn spread the holiday cheer all month long. Upgrade to TuneIn Premium today. Ho, ho, ho.
All right, we're getting some news out of the Treasury Department. For that, we go to Eamon Javers to bring it to us. Eamon.
Yeah, David, that's right. The organization was Russian. It was called Evil Corp, and the Treasury Department says it was up to no good. They say this was a cyber criminal organization. They're announcing sanctions this morning against the organization. They say that Evil Corp is closely linked with the Russian government. They say it developed the so-called Drydex malware that infected computers and harvested login credentials in an attempt to go after banks and banking customers around the world. They say it impacted hundreds of banks in 40-plus countries. They say overall it's responsible for more than $100 million in thefts. This would make it one of the biggest cyber crime sprees in history. And Leslie, this is not just the Department of Treasury taking action here today, announcing these sanctions against Evil Corp and its members, but also the Department of State is issuing a $5 million reward this morning for information that would lead to the capture of Evil Corp's leader. So an ongoing effort here by U.S. and UK authorities against a Russian entity called Evil Corp, which was engaged in cybercrime against banks and individuals that led to thefts of up to $100 million over the years, guys. Back over to you.
Wow, Eamon, staggering number there. Thanks for bringing that to us. It's time now for our ETF Spotlight, taking a look at retail ticker XRT continuing to trade higher this morning after breaking a 3-day losing streak. You can see they're now up about 0.2%. Now, looking at Nike, that stock has been trading higher today, up about 1.5%. The company receiving an upgrade from Goldman Sachs saying Nike is expected to show significant earnings growth with China being a key driver despite those trade tensions. But moving on to Tiffany and its first quarterly report since agreeing to be acquired by LVMH, that stock trading a little bit lower today, down about 0.2%. Results were weaker than expected, hurt in part by business disruptions due to unrest in Hong Kong.
Meantime, Sage Therapeutics plunging down more than 50% today. Our Meg Terrell can explain why. Good morning, Meg.
Good morning, Carl. Well, expectations were sky high going into Sage's phase 3 results. Its company market cap was nearing $8 billion, and this depression drug was successful in earlier studies. Now, Sage has talked about this drug, which it calls Sage 217, as a way to potentially change the way depression is treated. Instead of having to take medicines chronically for long periods of time, their goal is to treat depression acutely, similarly to an antibiotic. You take the drug when you need need it, and you stop taking it when you don't. But the study today failed to meet a primary goal, reducing depression scores after 15 days of treatment compared with placebo. The company, though, says there are a couple reasons for this, and that without them, the study would have worked. First, it says 9% of patients appeared to not have taken the medicine. Second, the study enrolled patients with milder depression than previous trials of the drug which succeeded. CEO Jeff Jonas telling analysts on a call this morning, quote, "The one takeaway from this study, if you don't take the drug, it's not going to work." Now, the company is still bullish on the medicine's prospects, saying the overall data are supportive of the medicine's activity. JP Morgan points out there are still 3 additional phase 3 trials ongoing, 2 of which will have results available next year. But guys, the street clearly extremely disappointed. Leslie?
Absolutely. Meg, thank you so much. Now let's send it over to Sue Herrera for a CNBC News update at this hour. Sue.
Good morning. Thank you so much. Here's what's happening at this hour, everyone. Speaker Nancy Pelosi announcing that the House is moving forward to draft articles of impeachment against President Trump, saying our democracy is at stake and the president leaves us no choice but to act.
Sadly, but with confidence and humility, with allegiance to our founders and a heart full of love for America. Today, I am asking our chairman to proceed with articles of impeachment.
Trains stood still today. Schools across that country are shut down, and the Eiffel Tower is warning visitors to stay away as unions held nationwide strikes and protests over the government's plan to overhaul the retirement system. The reforms are seen by the workers as threatening the French way of life. And a fire broke out at a luxury hotel in Athens, Greece, injuring at least 3 people. Fire crews evacuated the Athenaeum Palace and used ladders to rescue several people. It was not clear at this point anyway what caused that blaze or how many people were inside the hotel when the fire broke out. You are up to date. Busy news day. That's the news update this hour. Leslie, I'll send it back downtown to you.
Busy news day indeed, Sue. Thank you. When we come back, Trump's tariff tactics will speak with the president of the leading U.S. importer of French cheese on how he's preparing for the president's proposed retaliatory tariffs on French goods. More Squawk on the Street when we return.
ETFs. At Lidl, we're big on the sweetest Christmas and those happily ever afters, like our winter warmer deluxe mince pie strudel at just $2.99 and our deluxe espresso martini roulade for only $4.99. Big on a Christmas you can believe in. Now that's big on quality and always Lidl on price. Subject to availability, selected stores excludes an eye.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free, selected stores while stocks last, ends 1st of January.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today.
On the goal line, scores! It takes it home! Hockey fans, the 2019-20 NHL season is here.
Here's Pietrangelo, he scores!
And you can hear the action live on TuneIn Premium.
Gonna move, hit a shot, he scores!
From regular season action to the All-Star Game and through the Stanley Cup in June. Hear the home and away call for every game, for every team live. At home or on the go, never miss a game with the NHL on TuneIn Premium.
Upgrade today.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest additions under the Your New Episode section. Happy listening.
The U.S. government saying they may place up to a 100% tariff on many French imports as a response to France's new digital tax that would target U.S. tech. However, some non-tech companies are already feeling the pain, such as U.S. food importer Atalanta. Joining us now at a production facility in Lakewood, New Jersey, is Atalanta Corporation President Tom Gellert. Tom, how exactly are these proposed tariffs impacting your business?
Well, it's pretty scary and debilitating having these
threat of tariffs. We're already under punishment from the Airbus tariffs. They enacted 25% tariffs on all imported cheeses, most imported cheeses from Europe back in October. And now they're threatening to increase those even more or add other ones to the list. On top of that, as you mentioned earlier this week, the administration is threatening to put 100% tariffs on all French cheeses. That would be just crushing to our business. As you can see here in the background, we have a facility here that does packaging and value-added cutting and wrapping on cheeses from all over the world, including France. We have 100 good-paying jobs here, and we can't absorb. I don't know what business can absorb a 25% cost increase, let alone 100% cost increase. So it's really debilitating to our business.
So then, what would you do? Do you plan to pass those, if it gets enacted, do you plan to pass those extra costs on to consumers? And do you expect to see consumers really paying, twice for cheese from what they paid before?
Sure. Well, here as I stand in my facility, we just completed this $12 million renovation and investment in this facility down in Lakewood, New Jersey, where I stand today. We have plans for an additional $5-6 million investment in this facility. Right now, that plan's on hold. We can't sort of justify pouring more money into this facility and hiring contractors if there's uncertainty if our cheeses will be able to sell. There's no way we can absorb those costs. We'll have to pass them on to our consumers. All companies that touch the products, trucking, retailers, restaurants, they're all going to be impacted, and eventually the consumer. It's this is something that's impacting the tech companies, the big billion-dollar tech companies, Google, Amazon, Facebook. These companies are worth tens of billions of dollars, and it's a family business like ours that's really going to bear the brunt of it. So we can't absorb it.
Hey Tom, what do you tell people who are in charge of investing for their businesses, capital expenditures, when they're dealing with tariffs or potential tariffs that could easily go the opposite direction tomorrow, literally via tweet? I mean, how does the calculus work in those cases?
How does someone plan forward for their business? Here it is. We're at the end of the year. We're in our budget process for next year. We're trying to figure out, how many people we're going to hire. Marketing campaigns. We actually have a French marketing campaign plan. All this is investments in the business. As I mentioned, we have a capital investment plan for this building. All that's on hold. How could anyone sort of go forward? We're all sort of paralyzed here by the uncertainty. And, the impact of tariffs are real and have a financial impact to our business. But the uncertainty is really paralyzing to the business. I just want to go out there, hire people, talk to my customers, talk to my vendors, do the everyday blocking and tackling for our business. I got to be worried about, what's happening next. It's sort of things that are out of our control, but they're controllable if, wise decisions were being approached us in Washington.
Yeah, when I hear a number of similar concerns from businesses like yours. I'm curious, it's been, a few weeks since the 25% tariff went into place. Are you seeing a reduction or a significant reduction in demand for your product?
Well, this is the busiest season for cheese during the holiday season and entertaining. So typically the fourth quarter is good for us. In anticipation of the tariffs, because we were uncertain if they would come or not, we bought a lot of inventory ahead of time. So certainly the suppliers overseas, those are the ones that the government was looking to impact. They didn't get impacted because we bought the goods. It impacted us financially. We have to have a higher carrying cost of inventory, more storage, more warehousing costs. But we were trying to do that to mitigate any impact on our customers at this very important part of the season. We'll see how things bear out as we go into next year. Obviously, when it comes to cheese, you can't build up too much of an inventory that has a shelf life. I think the Scotch importers brought in about a year's worth of Scotch to mitigate that, but that stuff holds. But we've certainly made major investments on our cost structure, at least to maintain it, but that's not sustainable. And come next year, we'll have to pass on those increases to our customers.
And your distributors include Walmart, Aldi, Whole Foods. What has been the discussion with retailers like those about pricing discussions and pricing changes for imported cheeses?
Sure. No, we've been open and honest with our customers. As you mentioned, many retailers. Yesterday I was down in Florida. I was in a Publix store, and you look at their deli case, and it's a portfolio of cheeses, and a certain, through the Airbus tariffs, at least half the items in that case are going to be impacted. Now, they have labor at the store. It's going to impact, it's going to impact the sales through at stores like that, and then impacts those companies. So we've been trying to get them educated, get them to speak to their congressmen and people in Washington, so know how these taxes, basically food taxes, impacted everybody along the supply chain.
So, do you plan to change some of the supply chain that you're operating with? Maybe looking at retailers outside of the U.S. In order to diversify away from the potential for these tariffs?
Well, our business, we're an importing business. It's a third-generation family business started by my grandfather. Next year will be our 75th year, and we're an importing business. We've been sourcing products from overseas, selling to American consumers, as I said, for 75 years. Products that you typically can't find here, and products that customers demand. So we don't really have a network of customers in other countries. We do some business in Canada. It's a good market, but it's a relatively smaller market. Our business is here. We have 600 employees here, customers here, and we're here to focus on those employees and those customers. So we're just gonna try to do the best of it. Hopefully these tariffs don't last, and cooler heads will prevail, and we'll be able to go back to normal of how we're just operating our business.
Tom, thank you so much for sharing your story with us. We appreciate it.
Thank you.
Did you see that thing, not Gouda? That was pretty funny. Billionaire hedge, I like that. Billionaire hedge fund manager Steve Cohen is nearing a deal to purchase a majority stake in the New York Mets. Stop now for me to cheer. Okay. Under the deal, Cohen's current minority stake would increase to 80%. Owners Fred Wilpon, his son, of course, also would remain CEO of the Mets for the 5 years before transferring full control of the franchise to Cohen. Jeff Wilpon currently running the team. Interesting, Leslie, a 5-year transition here. Cohen has wanted to own this team for some time. He owns 8%. He has been talking to the Wilpons on and off for years. And now, of course, a number of people have said, yes, he'd indicated that the Wilpons had finally sort of said it might be the time, from their perspective at least, to part with the team. But not right away.
Not the time right now, anyway. 2025. I don't know, and I know that the financing and all the different valuation metrics sounds like that still all has to kind of be worked out at this point. But how do you purchase something with an option for 5 years from now?
Right.
It's
is
unique
it clear?
structure.
Would he take economic control prior to that, but still have contractually give them management control?
According to the press release, and I spoke with some people on background to get a bit more clarity on this, he will not take control until 5 years from now. Once you see Wilpon kind of step aside and Cohen will step in. But it's unclear whether you'll see kind of like a sliding scale, maybe an increasing stake over those 5 years, where gradually he'll obtain more and more control. But it's certainly, it's kind of...
The valuation won't change, though. It's $2.6 billion valuation on the team as part of the deal. At least that's what's been reported. And is that your understanding? I mean, I haven't done reporting on it per se. So.
I have not been able to confirm the $2.6 billion valuation. Forbes valued it at $2.3 billion back in April, so slight step up from that. But you can't imagine that. I mean, any kind of asset you purchase, you would hope that it appreciates over 5 years. So it'd be kind of surprising that, someone would
certainly
sell.
not the first multi-billionaire hedge fund manager to buy control of a sports team. There are quite a few of them at this point. He is a Mets fan. Grew up in Great Long Island, although tried to also be a part of a buyout of the Dodgers a number of years ago. Does own, I think it's roughly 8% of the Mets as part of the previous deal. Talked often through the years about the Wilpons being hurt by the Madoff fraud and how willing they have been to spend money. Although, to be fair to them, they have spent plenty, not necessarily always in the right places. We were 86 and 76 last year, Carl, so we weren't that bad.
Yeah, spending money hasn't always been the key to victory, especially this
the
past season.
But it'd be very interesting to see Mr. Cohen running, or at least overseeing this 5 years from now. Also, always interesting to wonder how his limited partners. Remember, he's not just managing his own money anymore. He went back out for some reason to raise capital again from investors at 0.72, Leslie. And you always wonder when your manager is going to be, focused on his team.
It's a distraction.
Focused on your money.
And you've seen Tepper kind of move the opposite way in purchasing the Panthers. Shortly thereafter, he decided, that he would return money to investors, and he would manage a select group of investors' money, but, kind of do the pseudo family office / LP structure that, is a change for him. I don't get the sense that Steve Cohen will be doing this. It's important to note that the purchase of the Mets, increasing his stake would be done through his family office. Right. But you're right. I mean, he kind of did the opposite, where he got back in the game from running a family office, and now, you do have to wonder if you're an LP how someone can be someone's attention.
It's always a question, but there were plenty who do it. There's the guys at Apollo who also own stuff. They got so much money. Why not buy a sports franchise?
Right. How hard can it be
Congratulations
to
on
run?
your ring, though, in advance.
Yes, thank you. We're looking forward to
for
it.
you.
We're going to spend money like drunken sailors.
When we come back, we're going to take a look at the markets here. Dow's down 50 points as it's turning into a pretty range-bound day so far. We'll see what the afternoon brings. More Squawk on the Streets back in a moment.
Turn on my TV and boom. Ah, Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ho, ho, ho! Want to make Santa's job a whole lot easier this year? TuneIn Premium is the gift your loved ones can enjoy all year long. Featuring commercial-free news from MSNBC, Fox, CNN, and CNBC, plus music, podcasts, and live sports. TuneIn Premium brings the best audio to you. Forget the stocking. And stuff their phone with the Everything Audio app. Search Premium to upgrade today.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
To LeBron, slam dunk! The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Kawhi Leonard and the Clippers are in Milwaukee to take on Giannis and the Bucks.
Hart pulls back, trying to make it 11-2.
Kawhi Leonard is all over the place. This Friday, the LA Clippers are at the Milwaukee Bucks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
NFL fans, hear every live game on TuneIn Premium.
Running down the sidelines and running in for the touchdown. And it is good!
Today, hear the home and away call as the Dallas Cowboys visit the Chicago Bears at 8:20 p.m. Eastern.
It's a block! Easy touchdown! A walk-in touchdown! The third time's a charm!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
We can't make traffic move faster during rush hour. But we can help you catch up on the news with TuneIn. With live around-the-clock news from MSNBC.
In the UK, they're significantly worse. When the president gets up to the podium...
CNBC and Fox News Talk.
The Fox News poll sizing up the race for 2020 found that each of the 5 top Democrats...
You can use your stop and go for good by staying in touch with the world. Search news to hear what's happening now.
On the Giblet podcast, The Pitch, Josh Muccio follows real entrepreneurs as they pitch to real investors for real money. On a new pod club, the host shares some of the podcasts he really loves.
I think my favorite part is getting to
talk with listeners of the show. And hearing from our listeners crazy experiences they're having building their business is just so fun. It feels like the show itself is just the tip of the iceberg.
Go to podcasts on TuneIn to see Josh's Pod Club picks.
Now let's get to the CME Group in Chicago. Rick Santelli with the Santelli Exchange. Hey, Rick.
Good morning. You know, an exciting day, at least exciting for me. I'm sure exciting for you. Lots of data points. And we have the man to divine what they all mean. Peter Bookfar, Chief Investment Officer, Bleakley Advisory Group, and a favorite of CNBC. Peter, claims 203,000, second lowest number since the 193 in April. ISM yesterday, 53.9, definitely not impressive, but over 50. Capital goods orders, non-defense ex-aircraft today, and final read on durable goods up 1.1, not too bad. What do you think of all that? Put it together in a nice snowball for me.
Well, claims is key. The data has been distorted, so we need to look at the 4-week average. Early part of November, we saw a jump in claims. There was some concern, but we can maybe attribute that to the seasonals. Now, overall, the level of firings, as measured by claims, is still rather tame, while the pace of hirings, as seen in the ADP report and maybe on Friday, has slowed. The ISM services number is key because we know that's a big chunk of the U.S. economy, and I do believe that the weakness in manufacturing has filtered into softness in services. Now, it's still growing, it's still a key part of the economy, but it is not immune to the weakness in manufacturing since a lot of service companies do business with the manufacturers. And in your last point with capital spending, yes, we did get a month-to-month increase in the core rate of durable goods, which was important, but year over year, it's still rather flattish as companies, because of the limited visibility in their businesses, if they do business overseas, are sort of waiting to see how this trade stuff plays out before they commit dollars to capital spending.
We continue to see what I deem as cryptic positive stories actually emanating more out of China regarding the trade issue and potentially signing it and coming up with an agreement on pro-rata tariff lowering based on this deal that they're going to sign. How much credence do you put in that, and why is that so important to the market? At the end of the day, something is going to get done, and that seems to be the macro view of the markets.
I agree. Something will be done. I think from the Chinese perspective, and even probably from the U.S. perspective, Phase 1 is as difficult as it has been, is going to be certainly a lot easier than any Phase 2 next year. I think the odds of a Phase 2 are slim to none next year. So I think both sides, knowing that, are trying to get as much as they can now and not relying on what maybe they can get next year. So from the Chinese side, they want as many tariffs reduced as possible, while the U.S. side says, well, we're not going to do that unless you give us what we want. So I think markets have to understand that this is whatever we get, and I think we'll get something, is probably all we're going to get, at least through the next election.
Peter, I hate to bring this up because I hate when politics has market implications, but as smart as that sounds, to me, the Chinese could be making a huge tactical error. If Trump gets reelected, and I'm starting to have a growing feeling he might, and why am I getting that? When the Democrats want to do impeachment 11 months before an election, to me that means they're afraid he could win. If he wins a second term, Chinese are going to be behind the eight ball. Your final thought?
Yeah, the Chinese will have a tough time negotiating with Trump if he gets reelected, but the Democrats have taken a hard stance too towards China. So I think China's sort of in a box either way, regardless of who wins. Therefore, they're trying to get as much as they can now and not rely on what they maybe can get next year.
Excellent synopsis. Thank you, Peter.
Thank you.
David, back to you.
All right. Thank you, Rick. Let's send it over now to John Fort. Get a look at what's coming up on Squawk Alley. John.
Well, in part, Dave, we're going to pick up some of that conversation Rick was having about trade and its implications, this time for tech, whether it's semiconductors, software, services. Where should you bet if you think there's going to be a deal or no deal? That's coming up on Squawk Alley.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ho, ho, ho! Want to make Santa's job a whole lot easier this year? TuneIn Premium is the gift your loved ones can enjoy all year long. Featuring commercial-free news from MSNBC, Fox, CNN, and CNBC, plus music, podcasts, and live sports. TuneIn Premium brings the best audio to you. Forget the stocking. And stuff their phone with the Everything Audio app. Search Premium to upgrade today.
It's Liz Hernandez with your TuneIn Music News Update. Contact Music claims Louis Capaldi is canceling concerts because of vocal cord issues. If he performs, he could cause permanent damage to his throat and cords. Someone else who's been on a leave of absence from the stage is Shawn Mendes, and he recently walked out on a hotel balcony in Brazil in his black boxer briefs, and fans went wild. To hear more music from Shawn Mendes and Louis Capaldi, search today's hits on TuneIn.
It's College Football Conference Championship Weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
Why do some leaders inspire action when others don't?
The best leaders are actually the best followers because they don't see themselves as the thing to be followed. They actually see themselves as following a cause bigger than themselves.
I'm Guy Raz. How leaders inspire movements for change. That's next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
Elizabeth Warren drafting legislation to take on mega mergers. Our Elon Moy joins us. She has the latest on that effort. Elon.
Well, David, this proposal would hit the biggest companies in the country, not just tech, but across the board. A source tells me that it would ban mergers or acquisitions when one of the companies has $40 billion in annual revenue. The ban would also apply if both of the companies each have at least $15 billion in sales. The proposed bill would also make it easier for workers in the gig economy to unionize. Now, this bill has not yet even been introduced, but already it is facing blowback from conservatives. On CNBC this morning, Grover Norquist, the founder of Americans for Tax Reform, called it a publicity stunt.
The number she has, the $40 billion in sales, no mergers beyond that. I mean, what decade does she think we're living in? How large does she think international companies are? You know, we're not living in a time with small companies competing in the world. American leadership has larger companies. It's really an odd 1910 worldview.
So I should point out that this bill is still a work in progress. Both the $40 billion and the $15 billion thresholds could still change, and the timeline for introducing this bill is also unclear. I'm told that Warren's office is working with Congressman David Cicilline on this. He's leading the House antitrust investigation, and of course, that is still ongoing. But the underpinning of the bill, drawing bright lines for banning mergers, shifting the burden to businesses to explain why a merger makes sense, guys, those are not going to change. Back over to you.
Some big implications there, Elon. Thanks very much, Elon Mui, covering a couple of beats politically today. When we come back, SoulCycle and Flywheel co-founder Ruth Zuckerman will join us on this controversy surrounding Peloton's holiday ad, which continues to get a lot of attention this week. Dow's down 37 and Squawk Alley starts in a few moments.
Christmas, a time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6s with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
My name is Lucas Askew, and I lead the sports marketing team here at TuneIn. I just want to say thank you for your loyal listening here on TuneIn. Have a great holiday season with your family, and please continue enjoying all the great sports games throughout this wonderful season. Happy holidays.
The swagger of a perfect dunk. The rush of a three made from all the way downtown. The adrenaline surge of great defense. Can you feel the goosebumps yet? There's nothing like live NBA and nothing like listening live on TuneIn.
Giannis down the lane to the rim, throwing right corner three. Another
TuneIn Premium brings you every minute of the NBA season, so you can be there when it matters most. Never miss the action as it happens. Hear the ball you love. Hear it live on TuneIn. Search NBA today to start listening.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen now to ESPN Daily on TuneIn.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Good morning. It is 8 a.m. at the Steve Jobs Theater in Cupertino, California. It's 11 a.m. on Wall Street and Squawk Alley. Good Thursday morning. Welcome to Squawk Alley. I'm Carl Quintanilla with Leslie Pickard, John Ford here at Post 9 of the New York Stock Exchange. Morgan Brennan has the morning off. Busy morning. The Street making some big tech calls today, including a pair of upgrades out of Stifel, upping both Facebook and Alphabet to buy, while Citi sees a 20% upside for Apple. They take their price target up to 300. Couple that with some upgrades of Nike at Goldman and Chewy at Morgan Stanley. There's been a lot of sell-side research to the upside today.
There has, and Facebook and Google in particular have kind of been in the penalty box over all of this regulation concern, trotting people out in front of Congress, having to answer tough questions. But as that was going on, we kept seeing earnings hold up so well. And I had the question, well, how long before the numbers outweigh some of the sentiment? This upgrade, it seems to be happening.
Well, and we speak with all of these market strategists day in and day out, and they talk about this, new trend towards cyclical growth. Not new per se, but, going into the new year, that's some of the themes that they're focused on. Will these companies really kind of play into that theme? Also interesting timing with the Stifel upgrade, and, it seems like, based on the note, that they see Sundar Pichai assuming the role of Alphabet CEO as one that would lead to a brighter future for the company. Also, in terms of valuation, it seems like that's another thing that they look at as being a net positive for the company.
The other element, Facebook's being held in check by this HSBC call, which says that 40% of the market cap could be at risk out of regulation liability. We'll see. So there's definitely some barbell strategies regarding FANG today.
Yeah, there are. And so, as you mentioned, there is still that overhang, that concern, but Facebook's already spending a ton of money on what they say is mitigating some of these risks, these effects, trying to protect the election cycle in the U.S. If they're reasonably successful in that, if there's no new Cambridge Analytica, you wonder, does the market start to look at that stock as having been undervalued based on that fear, and then does getting past 2020 become a lot of upside for them? Let's move on and talk Tesla. It is day 3 of Elon Musk's defamation trial out in Los Angeles over his now infamous pedo guy tweet. But the headline making waves this morning is one over his financially illiquid comment during testimony yesterday, saying that despite being worth about $20 billion, he doesn't have that much cash. Business Insider's Henry Blodgett joins us here at Post 9. And Stephanie Mehta of Fast Company also getting mic'd up. Glad to have both of you here with us. Henry, I'm not sure how much this cash thing matters. Elon Musk has a billionaire-sized reputation. He's got a billionaire-sized personality, and it's not like this guy is asking for all of his cash. Does this particularly matter, or is it surprising given the size of the bets that he's been making?
Well, I think we'd have to define cash poor. What does that exactly mean? There was a time 10 years ago when Elon Musk was actually cash strapped because he bet huge during the financial crisis on both SpaceX and Tesla. He basically saved both companies. They both worked.
It was like sleeping on Larry Page's floor.
He's a classic entrepreneur who actually takes risk. So many entrepreneurs, they would pat themselves on the back. Oh, it's such a risky job. I deserve everything I get. It's usually not risky. Elon took the risk. But now my guess is he's got enough money to handle this particular trial, which is a complete waste of time, which is another issue for him.
Waste of time. I wonder, is Elon Musk, Stephanie, finally facing at least some of the music for his fast and loose Twitter style? I mean, we thought that maybe the SEC would crack down on him, and I guess to a certain degree they tried, but he always seemed to me to be sort of triumphant in those exchanges. He looks a little bit cowed now in court.
Certainly the artist's renderings make him look a little bit down in the mouth, a little head between the shoulders. I do think that this is, if Elon is really taking a look at the impact of what he said, the fact that his words have meaning, I think that Vernon gave pretty emotional testimony and made a convincing case for how personally hurtful the comments were. This could indeed be a moment of reckoning for Elon Musk. And but I think a lot of us, and Henry included, have been saying for years, just focus on the business. We at Fast Company wrote a piece a couple of months ago saying, the world, whatever you think of Elon Musk, we need him to succeed. The electric vehicle market and the entire sort of ecosystem around electric vehicles wouldn't be what it is if it weren't for Elon Musk. We really are counting. If you believe in the sustainability model and you believe in saving the planet, we need Elon Musk to get his act together.
And Elon's strengths are so worthy of praise here. They're so much more important than these mistakes he's making. But both the SEC mistake and this, they're just unforced errors. Doesn't need to happen. A little bit more discipline, and never has to worry about any of this. But look at this stupid trial. He's wasting 3 days of his time, all the preparation. It's just such a waste of time, and so relatively easy to ignore it.
Did either of you think that pedo guy meant anything other than this guy is a pedophile, by the way? I mean, Elon Musk seemed to be trying to say it's just some kind of common English language usage of, hey, this guy's weird.
It's not a term of art that I've ever heard before. I only interpreted it as you suggested, that he was implying that the guy's a pedophile.
Right, yeah.
In terms of this idea of being cash poor, this is Silicon Valley. This is 2019, almost 2020. A lot of entrepreneurs have been able to take out loans that are, backed by the shares in the companies that, even if they're illiquid, they're still able to get cash pretty easily. Do you think the same applies for Elon Musk in this case? Like, is he actually cash poor when you kind of consider all the factors such as going to a bank for a loan?
I certainly interpreted it as cash poor relative to the amount of wealth in the stocks of SpaceX and Tesla, which may be, for all we know, $1 billion in cash. So we'll see. He could do fine. He could sell 100 million today. Wouldn't be a big deal. He's not cash poor.
If I had his cash,
Yes,
I would not
exactly.
consider myself
Yes,
poor.
most of us
Yes,
would.
I think that's about right. Also, want to get both of your takes on Larry Page and Sergey Brin stepping down from their operating roles at Alphabet. Elizabeth Warren, the senator and presidential candidate, tweeting, "Congrats on the move, Larry Page. Quick reminder, we do still expect you to testify before Congress, and changing your title while staying on the board and retaining effective control of it will not exempt you from accountability." I kind of had a mini rant about this yesterday. I feel, I guess similarly in this case to Elizabeth Warren, and they've still got voting control of this company. So you can say Sundar Pichai is running it, but he's working for those two specifically. They've got all the votes that matter. Where do you think this leaves Google, Stephanie? A better place or about the same?
In terms of the leadership of the organization, or in terms of having to testify before Congress?
All of the above. I mean, I guess in a sense, Sundar's maybe more on the hook than before, and Larry is maybe less, unless you're talking to Elizabeth Warren, who says nothing's changed.
Well, I think Elizabeth Warren's tweet was smart in the sense that she reminded the general public that even though these guys are stepping down, they are still very much the boss of this entity. And, you know, again, people who watch this show, they're sophisticated. They understand that these founders continue to have incredible influence over Alphabet and Google. But for the Elizabeth Warren voter, it's a good reminder that, you know, that these guys aren't going away anytime soon. They're not going to be fading into the sunset. And Google has gotten away with not testifying. And I think Elizabeth Warren is saying, we're going to continue to hold this company's feet to the fire.
At the same time, very few people have said, wow, Larry's been back there behind the scenes controlling everything. He's micromanaging and so on. I mean, my impression is they have been really out of the management of the company for many, many years. When I saw this, I almost said it's sort of a non-event. I mean, Elizabeth Warren, a lot of the platform is let's attack billionaires, and she did a nice tweet doing that yesterday, and if they have to testify, they have to testify. But I don't think there's going to be much in that testimony.
But as the hammer continues to come down in Washington, do you think there are other founders out there that are looking at, you know, this decision by Page and Brin and saying, you know what, I could still maintain control of my company and take a step back and maybe deal a little bit less with the regulation, despite what obviously Senator Warren was saying? Do you think you have a bunch of other founders that are kind of waking up to this news this week and saying, you know, hey, maybe I could do something similar?
I think I don't think so. I think that these people are incredible type A personalities, and they want to continue to be the CEO of their organization for as long as they can. You know, if anything, I think this shines a really interesting light on the importance for succession. I mean, Larry and Sergey are not young. They're still young guys. And they have essentially created a succession plan. They did it 4 years ago when they named Sundar sole CEO of Google. I don't see a lot of other Silicon Valley founder-driven companies with similar succession plans. So I would love to see us get a better sense of who the next generation of leaders are going to be at a bunch of these companies.
The other thing that's weird to me about this, though, is Google was that first company to say, we're going to be a controlled company, we're going to have founder control, and you looked at them and you thought, hey, these guys are young. They're only 46 years old, and they already decided it's time to step back and not operate the company. Who thought that was going to happen? I mean, Bill Gates, once again, was chairman at Microsoft until just over 5 years ago, well into his 50s. Even though he stepped back from the CEO role, he was still at least a chairman. They're saying, no, we don't want any of that. We're going to sail the yacht, I guess, around the world and explore the oceans.
Well,
Larry's yacht.
They're staying on the board, and the chairman doesn't necessarily have a lot of executives.
Yes.
They're still there, but I think Bill Gates is actually a good example. I mean, he turned the company over to Steve Ballmer. And ultimately, others.
Cured me to criminalaria for
exactly right. When did something else full time?
Not really. He was still chief software architect. Worked on the Zune, which did them a lot of good.
That's dirty. That's dirty pool.
I think, but it's true. I mean, you can't give Ballmer blame for everything. And then again, was chairman, and his presence was that important. I think that people felt like, even Satya Nadella, when he took over, he said, Bill Gates is still going to be working here X number of days a week, backing me up. You don't hear them saying that anymore because they don't.
Bill Gates much more visible than Larry and Sergey.
Yeah,
they have really, really stepped back for years. Yeah. Larry disappeared after he handed the company.
I mean, people don't even know what Larry's voice sounds like. So.
Yeah, and given the fact that he controls this nearly $1 trillion company, I think that's a little scary. Anyway, Henry, Stephanie, thanks.
Great to be here. Thank you.
We are a bit range-bound in today's session, although any decline across the major averages would be 3 straight for each. Dow's on track for the biggest weekly loss since August 2. And Apple and Nike leading the Dow thanks to that sell-side research we mentioned at the open. We're back in a minute.
This winter, there's no place like Wicked, the award-winning West End musical. Discover the incredible untold story of the Witches of Oz and how one came to be called good and the other wicked. Wicked at London's Apollo Victoria Theatre. Extra shows added for Christmas.
Sometimes in business, you have to take risks, but trading across borders and currencies shouldn't be one of them. With Western Union Business Solutions, we can help you manage the risk of doing business internationally. Our valuable experience, expert knowledge, and extensive global network makes us the ideal trusted partner for your business. And with our customer-focused support team, you'll receive a dedicated solution and personalized service. Visit westernunionbusiness.com. Western Union Business Solutions, a global financial network you can trust.
This is so difficult. What is Mark? Buying Christmas presents. Who's it for? Well, it's someone who has trouble unwinding in the evening and then getting up in the morning. Yoga retreat. Anything cheaper. How about the new Lenovo Smart Clock with the Google Assistant? You can set reminders, check the weather, and it's a voice-controlled alarm clock. Perfect. It's only $59.99. Save yourself 20 quid. 20 quid? Well, that's my present sorted.
Make anyone's Christmas with the Lenovo Smart Clock at Curry's PC World.
Christmas isn't just about the turkey, you know. At Asda, we've a whole range of delicious joints to bring the family together, like our Butcher's Selection pork loin at just £3.97 per kilo, and our Butcher's Selection beef joint at £4.97 per kilo. So, who's on carving duty? Asda, let's make Christmas extra special. Selected stores subject to availability.
Can you think of a better use for the time you spend keying in your business accounts? Good. Because smarter bookkeeping from Sage reduces that time dramatically, simply by taking care of repetitive tasks. It's helpful ideas like these that make us the UK's #1 for managing finance, operations and people. Trusted by over 1 million businesses nationwide. Find out more at sage.com/automate.
Let's take a look at tech. We're seeing those stocks pair some of yesterday's gains as investors digest mixed headlines on trade. You can see there the sector up about 0.2%. Joining us with more is Steve Milunovich, Wolf Research tech strategist. Steve, obviously not all tech stocks think alike when it comes to trade. How are you seeing the mix fare with some of the recent headlines we've seen on trade?
Well, it's a problem that just doesn't seem to want to go away. And frankly, even if we get a mini deal, I think there's a real long-term factor here, which is the U.S. is going to be at loggerheads with China for a long time. China is working really hard to create an indigenous technology industry that's really helping the semi-cap names right now because over 20% of their revenue is selling to the Chinese. But a lot of the rest of tech is suffering. And some of the chip companies are waiting to see how much they can or can't sell to Huawei. So right now, we're market weight tech. We are underweight semis. Yesterday went to an overweight on software selectively. So as you say, it's a mixed bag out there.
Overweight on software, why? What was the calculus that caused you to upgrade that subsector?
Well, the secular trends are obviously quite good, and the group has underperformed over the last 3 to 6 months as semis has really outperformed. So we're looking for semis to come in a bit. They're at a very PE high historically. Software, you still have a lot of companies selling at 10 times revenue. We don't really want to touch those. But some of the bigger cap names look reasonably attractive. So Microsoft, ServiceNow, Salesforce, Akamai, maybe VMware. So there are names that we think look reasonable here. But we're basically looking for software to continue to come back after underperforming much of the year.
And with regard to internet, we spoke a little bit earlier about some of the FANG names getting upgrades today. Is FANG attractive to you still largely or no?
I think FANG is. Internet in general had a horrible earnings period, and a lot of the mid-cap e-commerce platform names like Pinterest and Etsy and Twitter really had a tough time, and the stocks have taken a header. But part of their problem was losing share to the Facebooks and Googles of the world. We've maintained that the thing that really concerns me about those stocks longer term would be technology disruption. And I don't see that yet. Some of the new trends like AI, they're the leaders in. So in the meantime, the regulation cloud will probably continue, probably limits upside in terms of their ability to do M&A, but the stocks are relatively inexpensive. And the government even seems to be coming to their aid to some degree, fighting France on the digital taxes, concern about competing longer term with the Chinese, Tencent and TikTok and so forth. So we continue to think those are appropriate names.
Steve, some of the software names that you like, you named a few of them. Microsoft, there's Salesforce, ServiceNow, Palo Alto, VMware. I notice you've listed. They're really depending on corporate spending, enterprise spending, which when it comes to hardware has been a little touch and go lately. I wonder what trends you think are going to power those higher. Is it a shift in spend away from hardware toward these, or do you just think that the sorts of services they offer are so essential that they're going to continue to see benefit no matter what happens in the macro environment?
There certainly is a secular shift away from hardware to software and services, which has been going on for more than a decade, certainly. But I do think that what they're selling is extremely important. As you pointed out, the hardware companies in particular are seeing some of the big enterprises backing away here, having some concerns about committing more capital. That could affect software, particularly if the economy gets significantly worse here. Workday and a few others have talked about maybe some issues, but in general, particularly if you're moving to the public cloud, you're going to have to deal with Amazon, Microsoft, Google, digital transformation. You're going to have to deal with Salesforce and a number of these folks. So I think, again, the larger names are in a pretty good position because digital transformation isn't going to take a vacation.
Steve, I want to bring in Tom Fort of D.A. Davidson. He's a senior research analyst there into the conversation. Tom, we were talking a little bit earlier with Steve about this idea of you've got this digital tax fight now, which may imply some sort of an alliance between the Trump administration and some of these large tech companies. How do you see some of the recent developments on that front shifting the potential for regulation of big tech these days?
Sure. So I definitely think that for the four horsemen of big tech, Amazon, Apple, Facebook, and Google, regulatory risk on a global basis is very important and must be monitored. But to your point on France, I think, and if you look at actually the tariff situation between the U.S. and China, to the extent that the U.S. government is trying to get the Chinese government to honor intellectual property, that's beneficial for big tech firms. So to the extent that you might see some tariffs on French goods as a combating the digital tax there, that also could be beneficial for big tech, most notably Amazon. So not all the tariff moves are necessarily bad for big tech. Just some of them may take a long time to play out.
Maybe just bad for French cheese and wine. Thank you, Steve and Tom, for joining us and bringing us your thoughts on tech stocks today.
And Huawei, meanwhile, suing the Federal Communications Commission over its decision to curtail Huawei's business here in the U.S. Deirdre Bosa has the latest from One Market in San Francisco. Deirdre.
John, Huawei launching new legal action against the U.S., part of its ongoing defense of itself here in America, where it actually has little business left. This time it is challenging a recent FCC decision that bans rural carriers from using federal subsidies to purchase Huawei equipment. Huawei calls it unlawful because it strips the company of due process protections. Now, Huawei's U.S. Chief Security Officer telling us that they're fighting back.
This is our opportunity to use one of the legally permissible mechanisms to try to block the United States government carpet bombing of Huawei in the United States and trying to destroy us around the world. They've really gone too far, and so this is our way of saying enough.
Not mincing any words there. Meanwhile, trouble is brewing for Huawei at home in China. Circulating on Chinese social media, it's threatening the company's goodwill and strong position in the country at a time when its business overseas outside of China is being challenged. The treatment of the employee who was jailed for 8 months stands in stark contrast to Huawei's CFO, Meng Wanzhou, who remains under house arrest in Vancouver in her 6-bedroom mansion. In a post on the anniversary of her arrest, she writes that she now has time to read a book cover to cover and carefully complete an oil painting. Now, the recent backlash in China also contrasts to what has been patriotic support for Huawei smartphones in the face of those U.S. sanctions. In the third quarter, the company captured a record 42% of China's smartphone market, helping to propel it to the #2 smartphone maker worldwide. Back to you, Carl.
All right, we can't lose sight of Huawei as well, Deirdre, in the face of all this. Thanks very much. When we come back, no slacking off here. Shares of work surging after Slack raises its full-year outlook, posts a smaller than expected loss. A little smack talk on Microsoft as well. You'll hear what CEO Stuart Butterfield had to say about the quarter next. Check shares of 3M, the biggest laggard on the Dow this morning. The CEO, Mike Roman, saying last hour, still a lot of global economic uncertainty, adding that auto and electronics in China have been a challenge to the company this year.
Our gift to you is Christmas, a time for sharing gifts and laughter, and photos and videos. Make the most of it with a SIM-only deal packed with data from Tesco Mobile, like a 10-gig SIM for just £13 a month. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile today. Tesco Mobile. Every little helps.
Ends 29th of December. 12-month contract and unlocked 4G-enabled phone required. Terms apply. See tescomobile.com/terms.
My name is Lucas Askew, and I lead the sports marketing team here at TuneIn. I just want to say thank you for your loyal listening here on TuneIn. Have a great holiday season with your family, and please continue enjoying all the great sports games throughout this wonderful season. Happy holidays.
To LeBron, slam dunk! The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Kawhi Leonard and the Clippers are in Milwaukee to take on Giannis and the Bucks.
Hart pulls back, trying to make it 11-2.
Kawhi Leonard is all over the place. This Friday, the LA Clippers are at the Milwaukee Bucks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
Start hearing more of what you want. Upgrade to TuneIn Premium and get over 45 commercial-free music stations, live commercial-free news, and every live NFL, MLB, NBA, and NHL game. Visit TuneIn.com/premium to upgrade.
Hey, NFL fan, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can listen to every NFL game live as it's happening.
LaShawn McCoy has an opening on the right side, punches into the end zone for the touchdown.
Or catch it later on demand.
Offset backs behind Mahomes. The give is to Williams. Starts right, cuts it back to the left, and blows into the end zone for the touchdown.
You call the plays. Follow the NFL anytime, anywhere, all season long with TuneIn Premium. Upgrade today.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Introducing a new podcast, ESPN Daily. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. ESPN Daily, hosted by me, Mina Kimes. Listen and favorite ESPN Daily on TuneIn.
Take a look at shares of Slack up this morning and at session highs after a beat on the top and bottom and posting a smaller loss than the street was expecting. Slack also raising its full-year outlook. CEO Stu Butterfield was on Squawk Box earlier talking about the company's Q3 results, but also what all the talk about Microsoft Teams means for Slack's business.
And that's the thing that we need to spend the most time on, and probably the thing that I would like to spend the least time on, because you can think about these concentric circles of what's going on in the macro competition. Then there's the team, the company, organizational structure, bringing in the best executives, opening these offices, and then more than anything else, customers and the product, the service that we're delivering to them. But we do need to address it because I think there's a lot of confusion really deliberately.
Do they cheat on the numbers really?
I don't know. What we said in the earnings call yesterday was they announced 20 million. It's a migration of users from Skype for Business.
It comes if they're on one thing, it looks like they're on Microsoft Teams, but they're really not. Is that a fact?
No. I think they are using it. They're using it for something that's fundamentally different because Skype for Business was rebranded from Link. Link had 100 million users 5 years ago.
Is the user experience that much better with Slack?
Yeah, I think it's fundamentally different. Here in the city, there are hundreds of thousands of people coming into the office this morning who check Slack first thing when they wake up. It's the last thing they check at night, and it kind of runs all of the workflows through the course of the day, and I think that's fundamentally different.
It's an argument that a lot of companies were having 20 years ago about Microsoft, saying, yeah, you know, they might be kind of bundling in this product, but it's not as good as ours. People stopped talking about Microsoft in those terms for a while, but now, even for a hot startup like Slack, this competition with Microsoft issue is back on the fore. I don't have the data, of course, to know whether what he's saying is completely legit. I did meet with Microsoft recently, take a look at how they're trying to evolve Teams, I think to be even more of a competitor to Slack, but maybe he's right. Maybe people aren't using it head-to-head in quite the same way.
I think the bundle issue is the key question here, and it is the key hurdle for Slack, because if you are an enterprise, especially if you start to see some more weakness in the economy, some people spending less on technology, if you're already working with Microsoft and you can get this Teams product for free, there's a higher hurdle if you're a Slack and your whole business model depends on you converting users to being paid users.
That's true.
Whereas Microsoft doesn't necessarily need that.
I mean, we talk about the Apple ecosystem a lot from a consumer standpoint, but we don't talk as much about Microsoft Outlook, LinkedIn, Teams as an enterprise sort of ecosystem that is equally sticky.
It is very sticky, and it's sticky for different people, different workers for different reasons. I use Excel very little. A lot of people on Wall Street use it all the time. And at a certain point, certain enterprise applications are consumer apps, right? You need your workers to be productive. If they're more productive on Slack than on Teams, you're going to end up buying Slack. Right. So eventually, we're going to see if Butterfield's argument actually bears out, or if Microsoft can evolve and develop Teams well enough that it actually catches up.
And still working on kind of clawing back that share price to where it was the day of its direct listing, first opening trade, still down about 43% from that first trade, which is, for direct listing, that's kind of what we look for rather than the IPO price, because that's the first trade in which people are actually selling the stock. So, I think a lot of the volatility does, center around what goes on with Microsoft. And I wonder if over time we'll start to see, the stock's ability to move beyond that.
That was his argument.
All right, well, European markets set to close in just a moment. Seema Modi has the breakdown of today's market action overseas. Seema.
A reversal for the Stock 600, a lot of that having to do with the UK, which is the worst performer, the pound hitting a 7-month high. A recent poll today showing Boris Johnson's Conservative Party is poised to win a majority in the general election next week. Plus, weak data showing Europe may not be out of the woods just yet. There was some upbeat news on the final read for Q3 GDP, but in Germany, factory orders posted a surprise drop in October. And across the Eurozone, retail sales also disappointed. Right now, technology, autos, and financials are lagging across Europe. I want to point your attention to Glencore, down sharply after the UK Fraud Office is launching an investigation into suspicions of bribery at the company. Shares down 9%, but the stock really of the day is Moncler, soaring on a Bloomberg report that Gucci parent Kering has held talks to buy the Italian skiwear maker. Moncler's CEO throwing cold water on a possible deal, but analysts say a deal would help Kering expand its growing portfolio of luxury brands, which includes Alexander McQueen, Bottega Veneta, and also help it diversify its profits. Keep in mind, Gucci currently brings in more than 60% of Kering's total group sales and makes up about 80% of its earnings. Bernstein analysts also say Kering could help add value to Moncler, which is best known for its fashionable puffy jackets that on average sell at a higher price point than Canada Goose. This is also seen, Carla, as an attempt by Kering to rival LVMH, which is also on the acquisition hunt after that Tiffany deal 2 weeks ago.
Yeah, so much going on in luxury. Thanks, Seema. Seema Modi. Let's get a news update this morning and turn to Sue Herrera back at HQ. Good morning, Sue.
Good morning, Carl. Good morning, everyone. Here's what's happening at this hour. A Navy sailor shot 3 civilians, killing 2 of them before taking his own life at a Pearl Harbor naval shipyard. The survivor is in stable condition. No word yet on what the motive might have been. It comes just days before thousands are scheduled to gather at the military base to mark the 78th anniversary of the Japanese bombing. North Korea threatening to resume insults of President Trump and consider him a dotard if he keeps using provocative language, such as referring to Kim Jong-un as, quote, Rocket Man. It issued the warning via state media after Trump spoke of possible military action towards the north. French media reporting that riot police fired tear gas at demonstrators in the city of Nantes during nationwide strikes and protests. This over the government's plan to overhaul that country's health retirement system. And Rio de Janeiro has built a new structure to take advantage of its thousands of beautiful views. Take a look at that. It is a massive Ferris wheel known as the Rio Star. It rises almost 300 feet above the waters of Guanabara Bay, and it's scheduled to open tomorrow. I don't think I could do that, but that's I just don't
Not
think
a fan
I could.
of heights, Sue.
No, I'll take a look at it from the car. There you go. Back to you, Leslie.
Me neither. I know. Yeah. Would make for a good picture, but I don't know
Yes,
if the height fear is worth it. All right, thank you for that. Up next, we wade into the controversy taking over the internet. Peloton's latest holiday ad, SoulCycle and Flywheel founder Ruth Zuckerman joins us here at Post 9 right after this break. Stay with us.
My reputation was trashed online.
How many tours till Christmas? You know it's not far off when the Advent calendar goes up. At Asda, we've a great range to choose from, including Maltesers and Galaxy calendars for just £2 each. And our Asda Free From Advent calendar, just £2.50. Asda, let's make Christmas extra special. Selected stores subject to availability, 93 grams to 110 grams.
Christmas. A time for celebrating, unwrapping and unwinding. Capture every moment with an epic iPhone 6S with a 12-megapixel camera. Now only $12.99 a month from Tesco Mobile, saving you £72. It's just one of the ways we're celebrating 100 years of great value. Go in store or search Tesco Mobile. Tesco Mobile. Every little helps.
Saving £2 per month over 36 months was £14.99. 36-month credit and rolling monthly usage agreements required. Subject to status. Terms apply. See tescomobile.com/terms.
Ho, ho, ho! Want to make Santa's job a whole lot easier this year? TuneIn Premium is the gift your loved ones can enjoy all year long. Featuring commercial-free news from MSNBC, Fox, CNN, and CNBC, plus music, podcasts, and live sports. TuneIn Premium brings the best audio to you. Forget the stocking. And stuff their phone with the Everything Audio app. Search Premium to upgrade today.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
It's College Football Conference Championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game. NFL fans, hear every live game on TuneIn Premium.
Running down the sidelines and running in for the touchdown. And it is good!
Today, hear the home and away call as the Dallas Cowboys visit the Chicago Bears at 8:20 p.m. Eastern.
It's a block! Easy touchdown! A walk-in touchdown!
The third time's a charm!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
Welcome back to Squawk Alley. Peloton's holiday ad still in focus this week. As you know by now, the ad criticized for having undertones of sexism and classism. The cycling fitness brand responding yesterday, saying it's disappointed in how some have misinterpreted the 30-second ad. Joining us with her take this morning is Ruth Zuckerman, SoulCycle and Flywheel co-founder, author of Riding High, How I Kissed SoulCycle Goodbye, co-founded Flywheel, and built the life I wanted. It's good to have you back here.
Great to be here. Thanks, Carl.
I haven't asked you this during the break. What was your first impression upon seeing the ad?
Honestly, I didn't find anything wrong with it. I feel that there was just a huge overreaction. And I think, from everything I read, what I noticed first and foremost was everyone commented that she was thin. The woman was thin. So why would she need to get on a stationary bike, on a Peloton bike? The bottom line is weight loss is just one of the many benefits that we get from a spin journey. And, there's the endorphin kick in, which really helps us mentally and helps with depression. There's building stamina, there's building strength. So weight loss is just one component, and quite frankly, weight loss has to be in combination with the nutrition piece, and that's probably the last thing that's going to happen.
But Ruth, wouldn't the ad have been better if some of that were flat out said, right? Hey, I feel better, the endorphins are kicking in. What I saw when I saw the ad was a woman who looked thin and fit, but also insecure. She's got that look on her face like, am I okay? And it seems like her husband's given her this thing because she needs it, but there's nothing emotional spoken about it. He's not getting on the bike, too. It's like something that she needs, seems to be the message to it. And that makes me kind of uncomfortable.
I understand that, and I think you make a really good point. I think that explanation would have been really helpful. It was almost assumed that everybody knew what goes into the spin journey and what happens during the journey. And the truth is, yes, she seemed nervous, she seemed insecure. For whatever reason, spinning has always had this intimidating factor to it. And I'm sure that's what she was expressing going into it. But the truth was, they did do a good job in the 30 seconds of kind of showing how she approached it. And then at the end, she felt like a new person. She felt transformed. So in that sense, it was a good message.
People also seem to take issue with this idea of someone spending $2,000 on a Christmas present for someone, and kind of this luxury nature of Peloton, which is an image that they have been trying to kind of move away from, especially after they've gone public and they're trying to attract more customers. Did you see that in the ad at all?
I mean, I definitely saw that in the ad, and the truth is, in previous Peloton ads, all those Peloton bikes are living in a gorgeous, luxurious home or apartment. They can't get away from the fact that it's a high-cost item, and their demographic is a wealthier demographic. I'm not sure how to really get away from that at the end of the day.
And is that a bad thing?
Exactly. I mean, there will always be luxury items and brands out there for that set.
Right. We don't make fun of Tiffany for
exactly.
Diamonds and stuff. All right. So, given your reaction to the ad, what's your reaction to their reaction? Right when they say we're sorry if you're sorry.
Sorry. I mean, I'm not really sure what else they can say. They can't really apologize for what they think is a great product, and it is a great product, and it does a lot of good for a lot of people. Again, agree with your point that if there was a little more explanation in it, it would have helped everyone. But I guess the massive amounts of people who are not in that demographic have not experienced the ride, the journey, and so, yes, they don't know really what they're talking about or why she would react that way, or why he would give it to her as a gift.
So on the one hand, it's kind of like the Lexus with a bow on it commercials that we've been seeing for years, but there aren't the same kind of body image issues that come with owning a car. Right? So is there a certain amount of self-awareness that you need to have as a health and fitness brand about the emotional baggage that all of us are bringing to the topic that's going to I guess, affect how we interpret something like this?
Yes, I think there is. And again, as I mentioned before, for whatever reason, spinning has always had an intimidation factor to it. And so people are not going to know that. So she obviously acted that out and again showed this great result by the end of the journey.
Net, do you think that this ad is actually going to be a negative for Peloton? I say this because the virality of just the ad itself has gotten a lot more eyeballs than potentially would have been seeing the ad otherwise.
I mean, I keep going back to, any press is good press, and the amount of attention they have gotten over this is crazy. I understand there was an effect at the stock market, but I think it's going to reverse. I really do.
Really? I mean, as a husband, I don't know if I'm buying my wife a Peloton after seeing that reaction. Like, am I gonna take that $2,400 risk? I don't know.
But I like the idea that maybe she asked for the Peloton bike. We really don't know.
Maybe you don't know, and maybe we should.
Exactly.
Yeah. Stock's still up 20-some% from the initial trades. Ruth, thanks for coming in,
helping us
talk about it a little bit more.
Okay.
All right, Biogen was just halted, just reopening moments ago. Meg Terrell is back at HQ with more. Meg.
Hey, Leslie, where there's a key Alzheimer's presentation going on for Biogen right now at a conference in San Diego. And remember, this is the first time we're getting more information from the company about this drug that earlier this year it had said had failed. And then in October, it shocked everyone when it said it was bringing that drug back after it saw some more data that implied that it looked like it may actually work. So people were very highly anticipating this information. And And now the stock's reopening. It's down about 3%. I've been speaking with 3 people, 2 of whom are in the room there in San Diego, who are analyzing this data in real time. The presentation is still ongoing. And really the takeaway is that the data, if anything, look maybe slightly better than they did, at least in terms of what we saw in October from Biogen. However, it sounds like it's still pretty confusing. They're not giving a ton of clarity, saying this is a sure home run. And perhaps that is the reason why the stock is down slightly. Jared Holtz of Jefferies telling me that. It's not as if there's anything necessarily bad in the data beyond what we already saw in terms of it not being super duper clear. We're going to bring you any more that we get. The panel is going to start asking questions. There is a ton of anticipation and excitement in the room here in San Diego, so we'll bring it all to you when we get it. John, back over to you.
All right, Meg, thank you. And still to come, first retail, now cloud. The FTC is adding Amazon's most profitable business to the antitrust probe. More on that story after the break. First, Rick Santelli, what's on your mind today?
The big number's 239, $239 billion. Yes, Japan's new fiscal package. They rode the horse of monetary policy as far as it'll take them. Now they're switching horses. We'll talk about that after the break.
Hi. Your old car, your loyal friend, so many memories. It's impossible to leave their side.
Until now, get £5,000 off a selected brand new Citroën when you trade in your old car.
Alors, out with the old, in with the new. Hello Citroën, hello comfort.
The Citroën Swappage. Trade in your old car for a brand new Citroën, including the award-winning SUV range.
Citroën.
Discount on OTR price of selected Citroëns excluding C1. Registered by the 31st of December when trading in a qualifying vehicle. Not in conjunction with other offers. Search Citroën Swappage for full T's and C's.
What better way to celebrate the holidays than with a subscription to TuneIn Premium? With a bottomless library of the world's best audio, it's the gift that keeps on giving. Search Premium to upgrade today.
To LeBron, slam dunk! The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Kawhi Leonard and the Clippers are in Milwaukee to take on Giannis and the Bucks.
Hart pulls back, trying to make it 11-2.
Kawhi Leonard is all over the place. This Friday, the LA Clippers are at the Milwaukee Bucks. Tip-off is at 8:30 p.m. Eastern. Search NBA on TuneIn to follow your favorite NBA team today.
It's college football conference championship weekend, and TuneIn is your home to hear all the champions crowned. This Saturday at 4 p.m. Eastern Time, it's the SEC Championship. The undefeated LSU Tigers, led by the Heisman frontrunner quarterback Joe Burrow, look to cap their perfect regular season. However, it won't be easy as their opponent, the Georgia Bulldogs, will be hungry to pull off the upset and earn their ticket to the college football playoff. Catch all the action on TuneIn. Search college football to find your game.
Be better informed, be better prepared. The Better Network is on TuneIn. This is Brent Musburger. Search BETR and start hanging out with me and my guys in the desert weekday afternoons. The Better Network is now on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Dow down 51. Let's get to Rick Santelli, get the Santelli Exchange. Hey, Rick.
When it comes to fiscal policy, Japan and many countries have been invisible. There's a lot of talk as Merkel's final days kind of come to a close as to how leadership in the future will deal with the notion that Germany, their biggest industry, of course, being cars, exporting cars globally, biggest economy in the Eurozone, but cars, there's an industry that is in the middle of huge disruption. You've listened to Four on the Floor LeBeau talking about electric cars and, how much of the production, some very good production historically, good machining, good parts, good fit, good reputation of German cars and automakers, well, those days may be in the rearview mirror. And when it comes to Japan, there's many similar issues, but add on the demographics and the debt, well, you can only take monetary policy so far. If there's one thing I've learned, it's that if you looked at all the cumulative balance sheets of all the central banks post the credit crisis and you followed how they built up, the building up, the quantitative easing, the governments and central banks and agencies purchasing everything, especially in Japan, securities, ETFs, equities, corporates, that, of course, you're going to have somewhat of a controlled outcome. So we saw stock markets globally following balance sheets. Well, then about a year ago, balance sheets started to taper. You know how it ended. And now we have central banks that do quantitative easing, but we don't call it quantitative easing. But those cumulative balances are still going up. I guess the long and short of it is monetary policy can do things in the short and medium term, but it isn't the fix. You need real money, organic investor money, to make a true vibrant market and economy. So let's look at Japan's new fiscal stimulus plan. It's the first one since 2016. It's a little bit smaller, 28.1 trillion then, 26 trillion now, which comes out to a whisker under 240 billion US dollars. Remember, their GDP on an annualized basis was out recently from July to September, only 0.2%. And they had a consumption tax in October, moved from 8% to 10%. First of all, when you have an economy like Japan's, I get it. When you have 238% debt to GDP, this might look good, but the stimulus plan in a way goes in the other direction. So I'm not sure if this is a great idea. It's better than monetary policy, but sometimes you just hit a point where even doing the right thing at the wrong time may not get the results that we all believe they can. But on Germany's side, I think the future looks brighter for some fiscal policies. And my guess is we'll be hearing about it shortly. John, back to you.
Rick, thank you. And want to turn your attention now to a report out of Bloomberg, the FTC widening the scope of its antitrust probe into Amazon beyond just retail, now to also include its cloud business, AWS, Amazon's most profitable division. I, of course, just sat down with the head of AWS, CEO Andy Jassy, earlier this week in Las Vegas at the reInvent conference. Talked about Amazon's lead position in the cloud market, among other things. And guys, it seems to me that the toughest antitrust case to make in tech right now is in the cloud. I mean, you got Amazon, sure, which is big, but you got Microsoft that's gaining on them, arguably, and they're a bigger company, right? And they just won the Jedi contract. Oh, and you got Google, by the way, that little company that's trying to gain share in the market. Then you could also argue Apple's in this market with Siri AI, trying to draw on their services business, which exists in a cloud. Yeah, they're not selling infrastructure the same way, but they're trying to gain share. I mean, all the big folks are in it arguing they've got a shot to win. That's competition, isn't it?
Well, not to mention what pricing has done over time, right?
Yeah.
Yeah, it's not. But then again, people look at antitrust and think, well, maybe the rules have changed. Maybe that's the way we're looking at it. It's not about consumer protection. It's not about price.
And maybe it's also the fact that these are the big tech names that they're already looking at for other antitrust violations, and just the sheer nature of the fact that these are the companies that are competing against each other, and you're not seeing startups be able to succeed in this area in the way that an Amazon is, could kind of draw additional scrutiny here.
But you could argue that you are seeing startups succeed in this area. Snowflake, Frank Slootman, is all about building on top of the public cloud. There's an argument to be made that there's a lot of profit to be had for businesses that assume that a mega-scale public cloud is already there.
But the business model is the trick here because of the pricing, right?
But I scratch my head. No matter what metric you want to measure it on, if it's not price, if you want to say, well, we want to protect competition. Well, there's competition. All these big folks are competing. Well, what about the smaller guys? Are they able to compete? Well, they're able to build on top of these clouds. It's not like Amazon is locking them out. They're holding this big reInvent conference trying to invite them in. Microsoft has their conference trying to invite startups in. So I don't know. FTC, we'll see what they come up with.
And who benefits from all of that? At the end of the day, it could enterprise, consumers, so forth. So it'll be interesting to see how they frame that case, if and when they do. When we return, Billie Eilish, Apple TV Plus, and $25 million. We'll tell you how all of those things tie together after a quick break. Stay with us.
How many Great deals till Christmas. You know it's not far off when the Advent calendar goes up. At Asda, we've a great range to choose from, including Maltesers and Galaxy calendars for just £2 each. And our Asda Free From Advent calendar, just £2.50. Asda, let's make Christmas extra special. Selected stores subject to availability, 93 grams to 110 grams.
Your old car, your loyal friend, so many memories. It's impossible to leave their side.
Until now, get £5,000 off a selected brand new Citroën when you trade in your old car.
Alors, out with the old, in with the new. Hello Citroën, hello comfort.
The Citroën Swappage. Trade in your old car for a brand new Citroën, including the award-winning SUV range.
Citroën.
Discount on OTR price of selected Citroëns excluding C1. Registered by the 31st of December when trading in a qualifying vehicle. Not in conjunction with other offers. Search Citroën Swappage for full T's and C's.
This week at Tesco, buy 2 items from our chilled party food range, like tempura prawns or mozzarella sticks, and get a third one free. So for every 2 people you invite, you can ask another for free. But who? Linda from Accounts or Julio from Magaluf 2010. Tesco, delivering Christmas for 100 years. Cheapest item free selected stores while stocks last, ends 1st of January.
This is Jeff Dowd. I run the design team at TuneIn. Happy holidays from all of us to you. We've got big things in store, so have a great Happy New Year, and we'll see you soon. And make sure all your dreams come true.
Want to hear about the latest and greatest things to listen to on TuneIn? For reminders of the biggest live sports games, debates, and breaking news stories, follow @TuneIn on Facebook, Twitter, and Instagram to stay connected with the audio that matters to you.
Want to know what's happening in right now? The latest headlines are just a tap away with Fox News Talk on TuneIn. When news breaks, get up-to-the-minute coverage on developing stories from around the world. Plus, hear all the Fox shows you watch on your TV. Listen to Fox News Talk around the clock on TuneIn.
The Better Network is now on TuneIn. This is Brent Musburger. Search the Better Network. That's the BETR Network. And then let us get you better prepared to better enjoy the day in sports. The NFL, college football, basketball, hockey, baseball. Sharpen your edge. The Better Network is now on TuneIn. Be better informed. Be better prepared. Search the Better Network. That's BETR.
California coming up on 3 years since it legalized marijuana recreationally. So why is nobody compliant? Jane Wells explains from Los Angeles. Jane.
Hi, Leslie. You drive all over LA. You can see the billboards promoting legal cannabis. But if you really want to make money in this industry, get into compliance, because operators are finding out how tough it is to follow all of California's rules. Operators like Melissa Etheridge, who has spent years trying to get her business off the ground.
I've invested personally, 6 figures easily, over almost 7.
Etheridge says cannabis helped her during chemotherapy. She doesn't just want to license her name. She wants to build a business from the ground up. It's called Etheridge Farms. She finally got the first manufacturing license for Santa Cruz County, hopes to have product this summer. She compares the struggle here to her struggle back when she was trying to land a record label.
Etheridge Farms is not easily
to the 737
let's go sell it and make a whole bunch of money,
announces his resignation.
Dedicated to compliance and to medicinally present this to the world.
What's happening in California is a tragedy.
Now, Etheridge hired Julie Crockett. She does cannabis compliance for consulting firm MMLG. She says nobody is compliant. For example, California cannabis law says you can't give away freebies. That means your salespeople can't hand out free samples at trade shows to buyers, and everybody does that. And guess what? The state is also raising taxes on the legal industry next month.
The way that taxes have inflated the prices and made the industry unable to compete with a wildly successful illicit market is demoralizing for the operators who are licensed and trying to do it compliantly.
The state has about 50 enforcement officers. They've really been overwhelmed. They haven't gotten around to compliance enforcement much in a meaningful way, but stay tuned. Etheridge believes in the end, legal will win. And she's patient. Guys.
Jane, that is a great look at how difficult it is to make this all work, even with all the promises. Our Jane Wells in California. We're going to watch this market here. Again, range bound today. We're down 38 points on the Dow. Squawk Alley's back in 3 minutes.
Fun fact,
1 in 4 of us millennials have debt we might die with. And most of that debt is actually from credit cards. It's just not right. But with SoFi, you can get your credit cards right by consolidating your credit card debt into one monthly payment. You can get your interest rate right by locking in a fixed low rate today. And you can get your money right with SoFi. Check your rate in 2 minutes or less. Get a no-fee personal loan up to $100K.
Welcome aboard, Mr. Herjavec.
Oh, thank you. Good morning. Come on in. Let's take a flight. 3 meetings and 3 stops today. There's just never enough time. If you've ever considered flying private jets, you have to check out One Flight's badge, the most efficient private jet booking system. In business today, you have to be able to maximize your day. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 500 top-rated companies with over 4,000 jets in one place, and at prices that are within your reach. Thank you, Katie. One Flight offers complimentary meals with every flight. When I land, there's always a car waiting for me, courtesy of One Flight. What's your time worth? Badge.
If you've tried college but never finished, SNHU lets you transfer up to 90 credits toward your bachelor's degree.
It doesn't matter how old you are, you can do it. You can finish.
Finish your degree at snhu.edu.
Consistency can deliver on investment goals. Columbia Threadneedle Investments.
Will the GM strike settlement and staffing up for the 2020 census boost November's employment picture? Numbers and analysis tomorrow, 8:30 a.m. Eastern on Squawk Box.
In case you missed it, Apple reportedly shelling out $25 million for the rights to an upcoming documentary on Billie Eilish, following the recording artist in the days leading up to and after the release of her debut album. Eilish, of course, was just named Apple Music's Artist of the Year, but the doc is expected to stream only on Apple's TV Plus offering, not Apple Music. Pretty good for a 17-year-old.
And a documentary. I mean, as we look at these content wars, there were, a decade ago, nobody was watching documentaries, let alone shelling out $25 million for one. So,
I love what she represents. She's huge. She's kind of popular, but also kind of dangerous. It's nice.
It's worth $25 million.
Swift, yes, that's exactly right. We'll see if we bust out of this range this afternoon. There's plenty of news still to come. For now, let's get to the judge and a half.
Carl, thanks. I'm Scott Wapner. Front and center this hour, the big case for small caps, why those stocks could hold the key to your money in 2020. It is noon, and this is the halftime report.
Small but mighty. The Russell 2000 outperforming lately. The best plays in this group. Bang and focus. Big calls on Facebook, Alphabet, and Apple. Our experts take their positions. Nike, one of the best performing stocks in the Dow this year. Why it still has more room to run. It's our call of the day. And this stock is up more than 20% in the past month. Up more than 200% this year. We'll reveal one of the best investment ideas the smart money is getting into. The investment committee is ready to go. Halftime report starts right now.
Welcome. Good to have you with us on this Thursday. Our investment committee today, Joe Terranova, John and Pete Najeri, and Steve Weiss, and Kerry Firestone, the CEO of Arias Asset Management. We begin with the markets. Our focus on the Russell 2000, which has come alive over the past few months, confirming to many that the record-setting rally has room to go. Joe, the Russell outperforms the major averages over the last 3 months.
Over the last 3 months, yes, but certainly since 2018, there has been a significant underperformance. The Russell topped out in August of 2018. What's interesting about 2019 is both for passive and in active funds, you're seeing outflows in small caps. You haven't seen that since 2011. That's quite contrary to what you're seeing for large caps. The composition of small caps is the problem. So small caps are carrying in overweight to financials relative to large caps, and then they're carrying in underweight to technology and consumer discretionary relative to large caps. So the composition of it is the problem. I agree with the premise that in 2020, it could be critical in driving the overall indices higher. And I think you want to have inclusion of small caps and increase
well, it was
your
like
exposure
an easy
to
thing
it.
for the bears carry to cite. Yeah, but the small caps. Yeah, but the small caps. Now the small caps have come alive.
Yeah.
So the Russells joined everything else. It's helped broaden out the rally. And as that continues into 2020, that can only be a bullish sign for the overall market.
Sure. Well, I also think what you saw is people realizing after the yield curve's inversion went back to normal that the market had legs and that go through the rest of the year not worried about a recession. If you hadn't been invested in the market, then perhaps the place to put money is where there was underperformance, and that would be the Russell 2000 and small cap names. So the inflow of money, new money coming in that was on the sidelines, I think went in that direction rather than to the winners who had, if you looked at Apple or Facebook, so high up. And also, if you're thinking about how to avoid that trade war headwind, you've got all the regional banks, you have a lot of smaller companies that do not have as much international exposure in the small cap sector. And so I think it's perhaps a safer place to put money now.
Yeah, so Doc, we point out, okay, they've come alive. Mm-hmm. Joe rightly points out, yeah, but they're still over the longer term underperforming. Yet when people look at the small caps, they say they're trading at the biggest discount to big cap stocks since 2003.
True.
Therefore, there's a lot more room to run in this space.
There very well could be, Scott. I'm lucky enough that because of the unusual activity selection process we use, I've got two names on my list that are on here because of basically unusual upside call buying by institutions. In other words, large blocks of options being accumulated. And in many cases, these stocks have already caught up because the institutions are in them. Like you say, there's an awful lot of stocks that are still way behind. And when the institutions get involved there, it's just, like in a crowded theater when you're running through one exit, Scott. You're going to have that flood of paper and cash into these names, which will lift them up very quickly, much quicker than their large cap counterparts.
Pete, let's play some ball in this space, right? If we think that there's some room to go, give me some names. Let's play.
Well, I'll give you two names that I own. I don't, by the way, just to qualify this whole thing, I don't look at people, stocks as small caps, all that kind of thing. I just look for what I think is quality names and see all the different reasons why if they fall into the category of quality names. But in this space, Casey's is one of those that I really like a lot. This is something actually my daughter months ago, like about 6-8 months ago, said, hey, Dad, this is just an incredible play. I started looking into it. The more I looked into it, all of a sudden you look at a company that's got great growth and continues to move to the upside. Look at that chart. I mean, thank goodness for my daughter for pointing this one out to me because this one's been great. The other one that I really like, Luke & Coffee. Now, what are they doing right? Well, they're attacking Starbucks in their own country, obviously, in China. So I think that they are very close to getting to be one of these companies that's going to be not just competitive, but maybe even start to take over a little bit with Starbucks when we look at the China markets, which is everybody's looking at for Starbucks. Where's the growth? It's in China. Well, and they've done a great job. But Lucan, I think, is one of the better names.
Weiss?
First, a word of caution that I agree that they're more domestic, but you have to look. You have to be selective in small caps. You just can't go out and buy them all. The reason I say that is when with duties going up, they're less able to absorb it, like they're less able to absorb the cost of regulation. So just put some numbers on it. If you bring in $1 million worth of goods from China that were a duty of 2 to 3%, you're paying $20,000 to $30,000. Now you're paying 25%, which is $250,000. In a low inflationary environment, you've got to be able to raise your prices, or you take that hit. So you got to be very careful there because they can't move their supply chains as much as larger companies. In terms of the way I'm playing it, Cloudera, which I've been involved in, I continue to own that. I added over the last week and a half. That is not impacted by tariffs at all. It's technology, of course, as Joe pointed out, and also Zogenix. They published data on their epilepsy drug. It was very good. It's down a little bit today with the biotech index because we saw a major hit there, Sage. So I continue to go there like Pete. I could care less whether it's large cap, mid cap, or small cap. Yeah. Is this a story that I want to own?
I mean, you know, you need trade, obviously, to be better in 20.
Right.
You need growth to be better. You can't have conversations about recession every other week if you think that small caps are going to continue to perform, right?
Right.
Agreed. You can't be worried about where growth is going to be if you think small caps are going to do well.
Know, there was a statistic out today.
You need to have an up.
You need to see earnings grow, right? But historically, small caps have led the market up and have led the market down. So the fact they're moving up now can give you encouragement. Markets will take another leg. There was a statistic put out by CIBC today, which said that over 2019, there have been 90 easings by central banks around the world. There haven't been 90 new recessions around the world. So you've got central banks, including the U.S., the Fed, that are poised to make sure you don't get a recession going forward. So I'm not worried about the recession, but I am worried about a lack of earnings growth.
Contracting earnings, right?
Exactly. That's my concern.
Right. And here we go with an article today in the Journal about that very topic. A growing share of S&P 500 companies' earnings are contracting. More than a third of the S&P have posted a year-over-year decline in earnings in 2019.
Right, so it's all been multiple expansion. So you got about another year of multiple expansion. We had this discussion earlier in the week. I don't see that happening, and to me, that's the risk in the market. Not necessarily that it craters, but that this is as good as it gets.
The turbo booster of multiple expansion only goes so far.
Exactly.
Well, the tax cut in 2008, you really saw the benefit in 2018. That was that huge 26% sort of year over year. And this has been a weak year, but not as weak as people had expected, remember. It was supposed to be third quarter earnings down 4% or 5%, and they were sort of flat, down 1%. So if we look at the next year, I think that most people have between 8 and 9% earnings growth for the S&P. That's reasonable. If you have a sector, for example, the banks that we were talking about, all those regional banks, if interest rates do not go down, and I think most people are betting that there are not going to be any tax interest rate cuts in the next 6 months. That's good for them.
Why don't I have any, of all the picks you guys gave me for, I have them in front of me on the small caps, why no financials? I thought financials were a good place to be now.
There are financials that you could certainly add in there. Zions is one of them.
But not in any of the picks on the desk.
Yours I gave you a real estate company, and that's financial. Remax is, to some extent, it's a financial because it's all about when home buying goes up.
It's not like a pure play.
Yeah, but small cap is small. We were looking at, I gave one that was $1 billion market cap and 2.6, which was a biotech, Biohaven. Most of the regional banks are a little bit bigger than that. Silicon Valley Bank, First Republic Bank, those are big.
One of the reasons my list is absent financials is because you're going to need to know if you're going to get steepening in the yield curve. And that's tough to figure out. I'd rather go to other places within the small cap world. And Steve identifies the environment where you had multiple expansion in 19, you really didn't have earnings growth. That's a great time to look at small caps, because if earnings growth is moderating in large caps, the opportunities you're going to find are in small caps for potential growth and potentially even in mid caps. So a couple of names that I've mentioned frequently and I own: Guidewire Software, that's an emerging software play, $9 billion. They report earnings tonight. They're delivering cloud software to the insurance industry. If this company misses, it's a company that you want to buy on a pullback. Another name I own would be Dunkin' Brands. I think a lot of people are surprised that Dunkin' Brands at $6.5 billion is a small cap, because they view the large brand within this country, and they say, okay, it must be bigger than that. And then lastly, Chewy, which got the upgrade today from Morgan Stanley. Of the recent IPOs, I think that's an opportunity. Also, keep in mind, in 19, very unique environment, only 25% of the new IPOs were small caps.
Scott, November 14th, I talked about this one, Gentex, GNTX. Small cap, what do they do? Dimmable glass for all sorts of things, from RVs, cars, all the way up to airplanes and so forth. It's a specialty play, but this one's up 38% year to date. It's up, I think, $3 or $4. It was mid-24s when we cited it middle of November, and now it's pushing $28, $29 a share. That's the example of the kind of outperformance once the institutions get involved. One that they are not involved in, but I also own, is Air Transport Group. These guys, it's logistics. They have about 91 aircraft. It's almost exclusively Boeing, 737, 747, 767, 777s, all that kind of stuff. Logistics and transportation, it's only up 4%. Watch that one in 2020.
So the other area I wanted to talk about, which is interesting, and it doesn't necessarily play right off this conversation, but if you talk in terms of groups you need to keep an eye on, not only for the remainder of this year but into 2020, energy is in jeopardy of being the worst sector of the entire decade. It's in danger of turning negative for the decade. It's barely higher right now.
Okay. Well,
is there no opportunity to be found there?
In the near term, there's a lot of opportunity. I mean, I've been watching, Pete and John have had unusual activity in the energy space. There's an OPEC correlated trade that's going on right now in the marketplace where you're seeing a lot of speculative money coming in and believing that in the near term you're going to get a lift in a lot of these beaten down energy names. Longer term, 2020 is a very critical year, especially in the high yield debt market, because you're having significant maturities in energy in the upcoming year. You're going to have to, I think, see a lot of consolidation within the space, and it's going to go back to balance sheets. Who has a strong balance sheet and who is able to take advantage in that environment of companies that have significant debt? Listen, let's talk about the Oxy deal. The Oxy deal has not worked out well for Occidental. Carl Icahn is pretty accurate in his assessment of the situation right now. There's going to be further M&A that's going to happen in the energy space. I say look at a name like ConocoPhillips. Look at the big three. They have the balance sheet. They're going to be able to take advantage.
I think it's about the beta names right now because this is trading. And everything that we've talked about when we talk about the last 3 days in the energy space, it's a lot of really short term, Scott. I mean, with the exception of BP and Royal Dutch, which are big names that are out there, they're going out in time, looking for time. The rest of these are all trades. The energy space has been a phenomenal place to be a trader, not a great place to be an investor, but a great trading market.
What you're telling me is that there's a little conviction.
Right, absolutely. For what Joe pointed out, I mean, you look at some of these balance sheets, there's a reason there's not a very high conviction there. But there are names that have been moving a lot better than a lot of people. Go back to Marathon Petroleum. The fact that this was a $46 stock back in August and suddenly now it's trading near that $60 level. There have been options in there almost daily, it feels like, Scott. So there are different parts of the energy space that are really trading very, very well. And if you want very low volatility, but you want something that's a quality name, they continue to buy back their own stock, and the founder does as well. How about KMI? Something like that. Slow, steady, 5% yield. And if you're selling options against this is a 10% yielder at the end of the year.
You've lost 40% of global